Good evening, Ameya. You can hear me, right? Good evening, good evening. Let's give a couple of minutes for others to join. And I'm going to pin myself so that, okay. So I'm believing that all of you are doing good, and still, even though we are away, we are out from the intensive COVID related things, but we are doing a little better now. So I hope you guys still take a little bit of precautionary measures and try to increase your immunity powers and, stay safe a little. And having said that, we have like a lot of syllabus to cover. We have like huge volume of entire APM syllabus to cover in a span of 3 hours. And I believe in between, we are also going to take a break of 10-15 minutes to make sure that all of you are relaxed and, focusing back on the lecture. So I'm considering 2.5 hours of effective learning. And I believe that I can deliver proper content. Even if there is someone who is a little, I can say, underconfident about their preparation, even if somebody says that, sir, my preparation levels of APM is not up to the mark, I can promise you that by the end of this lecture, it is going to be damn clear for you guys as to what exactly is covered in APM. Every topic of APM, you'll have 100% conceptual clarity. That is my guarantee. The only thing is, I'm not going to take this as a revision lecture, or it's not like, in this chapter, these are the topics that are covered. I hope you already know these topics. The pace of the lecture is going to be a little higher, but we are going to cover the concepts as such. And first disclaimer point for me before starting up the actual session is, point number 1, we are going to use Kaplan pocket notes. So copyright is given to Kaplan. This is not my personal material or anything like that. My personal class notes, handwritten class notes, are given to my students. And in case if anybody needs, you can ping me and we will try to arrange those things. So for this session, we are going to use Kaplan pocket notes only, right? And second thing is, if you have any subject related conceptual doubts, wait till that topic is covered in the revision in this particular lecture. And if at all, even after covering that topic, if you are still thinking that, no, I need further more clarity, wait till the end of the course, wait till the completion of this session. And at the end, you can ask me any personal doubts or any kind of things, because I do not want the 3 hours that we are having, the 2.5 hours effective time that we are having, I do not want that to be spent on personal one-on-one doubts or anything like that. You can always contact me on WhatsApp, Telegram, and I'll be able to respond to you at my free times. So that's one thing that I want you to be very sure of. So without any further delay, let me very quickly share my notes, share the pocket notes. So just confirm on the screen, guys, you are able to see the PDF, you are able to see me, you are able to hear me. These are the 3 major things that I want to confirm before starting. Yes, thank you. Thanks for the confirmation. Thank you. Thanks everyone for the confirmation. Chalo. So before starting with the concepts, your examination pattern has remained the same. First question for 50 marks, then 2 questions for 25 marks each. It remains the same, but as I hope that you guys are already aware that the professional marks has changed. I have made a video on the subject change and syllabus changes that are applicable. There are major changes when it comes to APM. Other subjects, minor changes are there, but APM major changes are there. You have 6 additional topics introduced in the syllabus. Most of them are related to, obviously, technology related aspects are covered. And some topics are extended, which were earlier very less tested, very less introductory level information is given. Now those topics, advanced level information or advanced level concepts are covered for you. So in total, you have 6 major changes, 6 new additions in your syllabus. So that is the first key change. And second one is your examination professional marks have been increased. Earlier, you used to have only 4 marks for professional marks. Now you have 20 marks for professional presentation. So you are effectively going to give the exam only for 80 marks and 20 marks you are going to score for your professional presentation. So what exactly is covered in professional presentation now? First thing is proper communication. We call it business acumen. You are not expected to answer as a student. You are expected to answer as a professional consultant, a business analyst. So your communication terminologies that you are going to use, the jargon that you are going to use has to be very professional and has to be clear. That is the first reason why you will get professional marks. And the second one is there has to be proper analysis. So you should have evaluation and analysis skills. So in a given scenario, what kind of hypothesis are you making? What kind of assumptions are you taking while solving that? Are those assumptions really valid? Are they realistic assumptions? Or are you just taking an assumption because that is the only assumption that you know? Is it appropriate in that scenario or not? All these things are going to be checked for giving you those professional marks. And the biggest advantage of this professional marks is in the same limited time of 3 or 15 minutes that you have in your exam, instead of writing for 100 marks, you are going to write now only for 80 marks. So obviously examiner also knows that. So what they are doing, they are reducing the length of the questions. I mean, not the length of the question as in not the content of the question, but the depth of the question, they are slightly reducing it so that you can also focus on the professional presentation. So they are expecting more proper acumen from you guys this time onwards. So pay focus to the terminologies as well. Do not just give random words or random answers. Try to keep it professional. So you can see on your screen here, you have professional marks now. So this professional marks you have for section A 10 marks and section B 5 marks per question. So in section B also 2 questions into 5 each, again 10 marks. So 10 plus 10, 20 marks of professional presentation. And the 4 major skills that they are going to test is your communication skills, your analysis and evaluation skills, skepticism, how much questioning mind do you have, and commercial acumen. Are you thinking as a business analyst? Do you have business idea, or are you just acting like a student yet? So this is what they are going to test you. So be very careful with your presentation part. So you should exhibit some leadership capabilities. Now, when you are answering a question, it's just not that, see, for example, they give you a question on a scenario where corporate failure is happening. Yes, corporate failure has been removed from your syllabus, but that doesn't mean your scenario will not include a question where a company is failing. No, do not think like that. Corporate failure has been removed as in the methodologies that we used to calculate earlier, those Z score and all that stuff, those values and calculations are removed. But the concept of sinking company is always there in the syllabus. You do not need to think like that. So suppose if they give you a question wherein in the scenario, the company is actually facing financial difficulties or they are facing operational difficulties. So are you able to give proper answer? Let's say the question says, how do you plan to revive this company? Or what are the steps of actions that are required? So just saying that, okay, I'll implement TQM, I'll implement BPR, I'll implement this, that. The video keeps lagging for me and it's not in sync with the voice. Internet speed is good. Same for everyone. Oh God. Okay. Wait a sec. I guess it's technical glitch is happening. Okay. This dreaded thing. Okay, let me just change the source of audio, ma. Just a second. Okay. Is it better now? Can you guys confirm? Is it a little better? Still laggy? The video is laggy or audio and video are still off sync? Both. Okay. That's to be considered. Just a second, guys. Just a second. Let me pause the recording so that later these people won't. Oh. Sorry for that. Chalo, let's continue. So as I was saying, let's say in a given question, a particular scenario is given wherein the company is failing, or else they say that the company is looking to completely restructure themselves, or they are trying to look for BPR, business process reengineering or something like that. So you can give all kinds of answers. You can say that I would remove all the board of directors. I'll replace them with some new directors. I will fire all the inefficient employees. We will hire more skilled employees. You can give these kind of answers. But professional, commercial acumen means, is it realistically possible or not? Is the student just giving random answers, theoretical answers, which are not practically possible? Are they also considering the practical implications of that? That is what the examiner is going to see from now onwards. Not just answering to the question and saying that, yes, so this question, this is the answer, simple. Is that answer practically possible or not? That is also going to be considered from now onwards. Clear? Are we good with the professional presentation related explanation? I'm assuming that this added value to your exam tips and all. Chalo, next one. So keeping this one more point in mind, what are the key reasons for failure in APM? So this is something that is very important for you guys to know. Where are the students failing? Look at the first point, sir. Repeating learned facts. Many students think that APM is a theory paper. So I'll just read the portions. I'll just remember these methods that they're talking about. Let's say Mendelow's matrix or balanced scorecard, building block model, performance pyramid, SWOT analysis, special analysis. I'll just remember these things. I'll by heart these things and I'll replicate in the exam. No, we do not want you to replicate the learned facts. We are not looking at a Google search. We are looking at an analyst. We want a business analyst for APM paper. So make sure quoting the stated learned facts plus applying that to the given scenario. That is what is the crucial thing in APM and SBL paper. This is applicable for SBL as well. Not relating to the scenario, giving vague answers, or just because they say use balanced scorecard, just drawing the balanced scorecard, drawing the 4 quadrants and quoting the 4 quadrants. That's none of the requirement. The requirement is to use balanced scorecard for that scenario. Scenario application is more important, not answering the proper question, not applying the knowledge to the scenario, lack of practice. So these are common things, but the most important is not try to just replicate the facts, also apply to the given scenario. And fundamental calculations, you should be able to do fundamental basic calculations. Models should be appropriately used. You should know when to use a SWOT analysis, when to use Porter's 5 forces, when to use PESTLE analysis. You should be able to know that. Okay. And sir, paper name is Advanced Performance Management. So the questions, the ideology behind the paper is going to be, how is any given thing, whether it is external forces, internal forces, whether it is technological changes, environmental factors, whatever it is, how is that going to impact the performance of the company, and how is it going to impact the performance measurement of the company? These are the 2 things that you should always have in your mind when you are appearing for APM paper. So first one is focus on the performance management and performance measurement. These are the 2 crucial things. Do not think of other aspects. How is the financial reporting going to be done for this? What is the journal entry for this? Done in SBR. APM paper mein performance measurement, performance management. End of discussion. That is what we want you to focus. Interpret the data properly and also understand the major difference between the 3 principles. So simply, I'll tell you one simple example. When should we use Porter's 5 forces? When should we use PESTLE analysis? Can anybody tell me? In one simple word, sir. I'm not expecting you to answer what is PESTLE, what is SWOT and Porter's 5 forces. I'm just asking you when Porter's and when PESTLE. PEST or PESTLE is the same thing, by the way. External environment talks about PEST, okay? Country PEST, internal Porter, okay? A little bit better answer. External environment PEST, okay. Most of you are saying that external environment will use PEST or PESTLE, very good. Porter's 5 forces to assess the market attractiveness. Yes, agree. Industry specific PEST, company specific Porter. No. Industry specific, we use Porter. And PEST is not specific to any company, any industry. PEST is external country analysis. Porters during diversification of business. Not necessary, sir. Not necessary. Even when you are starting a new business also, we can use Porter's 5 forces. And to be very honest, Porter's 5 forces can be used at any point of time in your business. I'm not even thinking of taking any decision, sir. At this time, I just want to know what is the competitiveness of the industry. Right now, education industry is there. What is the competitiveness in that industry? I can use Porter analysis, Porter's 5 forces to evaluate that. I'm getting very good, strong answers in the chat section, guys. I'm very happy about it. Sir, understand. Porter's 5 forces is used to analyze your industry. So whatever industry that your company is located in, say software industry or manufacturing or whatever it is. So in that particular industry, how the competitive forces are working, that is done in Porter's 5 forces analysis. PESTLE analysis we do when you want to do an external environmental analysis. How are the external forces, something which are out of our company, something which are out of our industry, something which are actually affecting every business or majority of the businesses. PEST is more wider in scope. Porter's 5 forces is a little lesser in scope. And SWOT analysis is company specific again. So company level pe SWOT analysis, industry level pe Porter's 5 forces, entire environment analysis is done through PEST. So you should have an idea about which model should be used for what scenario and what requirement. Am I clear, sir? Porter is about the surroundings from the business, customer, supplier, competition. Yes, it's more oriented towards a particular industry. Very good. So this is how we should learn APM. Okay. I get excited because APM is one of my favorite topics, favorite subjects of ACCA. I one time or the other, I have taught all the 13 papers of ACCA, not 13, except for ATX. Total 15 papers of ACCA I have taught once or twice or whatever it is. Law, I taught just one batch. F1, F2, F3, I taught one batches each, max, that's all. And then rest of the papers I have been teaching forever. But if you ask me, sir, out of the 15 papers of ACCA that you teach, what is the most favorite one? I'll say APM, then SBR. These two are my favorite subjects. I don't know why, but yeah, APM has a lot of things to learn. So let's start our syllabus, sir. So chapter 1, we are going to talk about planning, control, strategic planning, role of performance measures, blah, 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 blah. So directly jumping into it without paying attention to the details. Let me tell you something, sir. In this chapter 1, how many of you think chapter 1 is important from exam point of view? Exam point of view. So usually in any subject, chapter 1 is basically introduction to the subject most of the time. If you see FR, financial reporting, first chapter talks about introduction to statements, financial statements. Let me tell you, your chapter number 1 of APM Kaplan textbook, for your APM paper, expect at least one question in 50 markers. Your section A of examination is there, right? The 50-mark question. At least one part of it is usually coming from chapter 1. You know, the CSFs, KPIs, SWOT analysis, BCG matrix, these things. At least one part of this section A comes out of your first chapter. So pay very good attention here. The basics obviously will be useful for the rest of your syllabus as well. But yeah, from exam point of view too, this is very important. So planning and control, that is where we'll start with. So every organization should have a mission statement. The mission statement actually talks about the purpose behind your company. Why did we start the company? What did we think of achieving at the time of starting the company? Or when the mission statement is changed. So most of the students think that mission statement should not be changed, but that's not true. Maybe the purpose of your starting the company has achieved. So you want to move on to a bigger purpose, or you want to change because of the changes in the environment, or something more crucial came up. So you want to switch to that. So mission statement can be changed. So the mission statement actually talks about the purpose of existence of your company. Why are we doing business? What are we expected to do? What are we supposed to do? That is what is covered in mission statement. Whereas your vision statement talks about how do we reach there? What are our future plans? What is our thought process? What is our ideology to reach that? What are our strategies to reach that? So mission is laying the foundation for everything that you do in the company. So whenever every question, in any question, the majority of the information actually comes from the mission statement only. You break the mission statement, you will get your business objectives. What is the company trying to do? Then for each of those things, you understand what are the CSFs and what are the KPIs, and then you are done with your question, majority of the question. Break the vision, break the mission statement into bits. Those bits are what you need to achieve, your business objectives. And for each objective, identify what is the critical success factor. What should I do to make sure that I reach this goal? Then how do I measure that? How do I state that, yes, I'm in the right path, or I'm able to reach that position? So that is covered through your KPIs, right? So the mission statement of the organization will lay foundation for everything else that we do in the business. Then the 3 levels of your business. So again, I'm telling you, most of the students think that these 3 levels are basically strategic level means board of directors, tactical level means middle level managers, operational level means lower level managers. God bless your souls. Do not think like that. That is absolutely wrong. Trust me, guys, that is absolutely wrong. We teach like that at the basic level so that students understand. But that is wrong. When you are doing APM paper, you should not give the designation into a particular category. Board of directors always strategic, sir. Absolutely no. Sir, imagine a condition, imagine a situation where there is an MNC that is sitting on the top and we have 10 different companies, 10 different subsidiaries in each state. We have one parent company sitting somewhere. The CEO, CFO, and the major strategic level people are sitting there. We have established 10 different subsidiary companies. Each company has a board of directors and all that stuff. But all the key decisions are taken by the top level management sitting in the parent company. Those people will be in the strategic level. All these board of directors will go into tactical level now. So do not understand that board of directors are always in the strategic level. That is wrong. Is that clear for you all? Right. So the strategic level people take the long-term decisions of the company, which has a very big impact, huge impact. And also they are going to have a lot of involvement of huge amount of funds. Whereas tactical level people are more oriented with the operationals and not the direct operations, but more like marketing, sales, or else how should I fix the sale price? Should I start a new product or not? Which market should we expand into? Should we start online business or not? Any of this mediocre, we can say medium level decisions or medium level financial requirements, those are done by the tactical and operational, the ground level, the floor level, the people who are actually involved in the dirt. Sir, I'm not talking operational employees. We are talking about operational managers. So for example, HR manager is there, factory manager is there, manufacturing in charge is there. So these people are on the floor directly interacting with your workforce. So they give you the real information. That is where top-down approach and bottom-up approaches come again, as we know. So planning, we just set the objectives, and in control, we try to monitor. So these are the keywords that you need to understand. Planning ke time pe we set things in motion. Control ke time pe we see whether whatever we wanted to happen, is it actually happening or not? We see at the control level. The mission statement outlines the broad direction of the organization, its reason for existing, and the values that the company is trying to achieve. We already discussed all that. And strategic level and operational levels are we already discussed. These are by senior people, these are by operational level people, and then all the things whatever we have discussed, the same things is given here. So long term considers the complete organization as a whole, whereas operational and planning, the operational planning, they only consider the lower level or the regular day-to-day activities related kind of a thing. So, and also some mission strategic level pay, we take more of a predictive data into consideration. See, CEO, CFO are not interested to know what already happened. They are more like, what are our budgeted sales? What are our forecast marketing expenditures? Or what is our future plan after 4 years or after 5 years? What are we planning? How are we planning to launch a new product? Are we planning to expand? They talk about future. Whereas tactical and operational are more oriented on the past. They're like, sir, ye hua, wo hua, this is what happened, that is what happened. They more focus on achieving short-term objectives. They do not think long-term. This is the major thing that you need to keep in mind. Now, this is also important for your answering of exam questions also. Your answer should be layered. So what do you mean by layered? It means if there is any question that involves a strategical thinking implementation, say they are saying that how do you implement just in time, or how do you implement total quality management, how do you implement whatever, Six Sigma. So there are 3 major phases that are involved. The first phase includes a strategic analysis, a SWOT analysis, basically SWOT analysis. I'll try to identify what are the strengths, weaknesses, threats, opportunities that are available. What are the key objectives that we are going to achieve? What are the power and interest of different stakeholders, like your Mendelow's matrix, and analysis, cost gap or target gap or whatever. Basically, what we want to achieve and what are we right now. And the difference analysis. What are our strengths, weaknesses, opportunities, threats? Who are our stakeholders? What is the importance of each stakeholder? What is the power that each stakeholder is having on us? What are the target gaps? What are the variances that we are having? So do an analysis of all these things so that you know the past. Then you make choice, a strategic choice. Yes, this strategy will be suitable in this case. Since we have a strong board of directors, or since we have a very strong strategic level, they have great expertise, business knowledge, great business acumen. So in this case, this kind of strategy would work. So what is suitable for that particular scenario? What is the best choice? So we need to look at that. So first to do the analysis, then we make a choice, and then we implement and we monitor that. So strategic analysis, strategic choice. So strategic choice pay, you get the most important question, that is your Porter's generic strategies. What are the two Porter's generic strategies, guys? What are the two Porter's generic strategies that are available? How can a business succeed? What are the two major things? AXS, cost leadership and product differentiation. Very good. So should I choose cost leadership or should I choose product differentiation? That is a strategic choice. Sir, OnePlus has gone with cost leadership. iPhone has gone with, Apple has gone with product differentiation. Both of them have succeeded. There is no one right or wrong answer here. What works for each company is a personal choice. That is a strategic choice that they make, right? So what is your competitive strategy? Do you want to go with cost leadership or do you want to go with product differentiation? So in which type do you want to grow? What is the direction that you want to grow in? See, there is something called empire building. Does anybody know what is empire building? Yes or no? Just a simple question. Yes, what is empire building, sir? So right now, if you see the latest one that is available in the market, empire building is basically creating a strong empire for yourself by acquiring more and more companies. That is growth through acquisition. Right now, if you see Byju's has acquired like more than 10 to 15 edu companies, edu techs. And even this thing, your recent example of Zomato acquiring Zepto, right? Are you guys aware of the examples that I'm quoting? Right? So these are called empire building. Empire building means I'm trying to create an empire by acquiring other businesses. So will this succeed in the long term? If there is a strategical mapping, you know, you guys call it as at the time of goodwill calculations, business synergy, you will call it, right? So if there is really synergy between the strategic aspects of the companies that are being acquired, then yes, it will work in the long term. But if you are just purchasing every Tom, Dick and Harry that is available in the market, it doesn't work for you. So we need to understand empire building is a scope. It is a direction of growth. Some people are more interested in organic growth. I grow with goodwill. Some people want to grow faster by acquiring other companies. Both are fine as long as it works for your company. So what kind of choice are you making? Is it suitable choice? Is it the appropriate choice at that particular phase? So we need to understand that. And so whether expansion can be achieved through organic growth, acquisitions, or sometimes through joint arrangements as well. You know, joint ventures, joint agreements. So we might have different types of joint arrangements that we can make with different companies. So all of these things are your different options that are available for growth. Cool. Moving further. So what is the role of performance measures, sir? It is very important to measure your performance, sir. Isn't that why you guys are giving mock exams and all? Why do we give mock exams, sir? To understand how we are able to perform in a particular scenario. If I do not measure, how will I know where to improve? So obviously it is important to measure my performance. But how do I measure them? Whatever you are creating as an objective or whatever you are creating as a target for your company, that should be SMART. So what do you mean by SMART here? You guys know what is SMART expansion, right? The abbreviation of that, the full form of that, or whatever you want to call it. Specific, measurable, achievable, relevant, time bound. Isn't that what SMART means? I'm assuming all of you know the full form of SMART objectives, right? Confirm? Yes? Okay. So what exactly happens in SMART, sir? See, if I'm saying that I have to complete APM syllabus, it's a goal, but that's not a SMART goal. I'm not being specific. There are so many missing attributes in that. Suppose, let me rephrase that. I want to complete APM syllabus, 1 full-time plus 1 revision by end of August, so that I can appear for ACCA APM examination. Now, this is a SMART objective. This is a SMART goal. It is specific. I know what exactly I want to do. I want to appear for ACCA exam. Measurable. I need to complete APM syllabus. Achievable. So whatever I'm setting as a goal, it should be an achievable goal. It should not be an unrealistic goal. I should not create a goal stating that I want to, set up a house on Mars. It's unrealistic at this point of time, at least for me. Sir, I'm not a multi-billionaire like Elon Musk. So for me, it's not achievable. So our goal should be achievable and relatable. It should be relevant or relatable for me. It should make sense for my business. I should not have a goal which has nothing to do with my business operations. Time bound. There should be an end date or end time that we are planning to achieve our goals by that point of time. So SMART objectives should be there. And this is one of my favorite quotes. I have been using this in my entire life. What gets measured gets done. What gets measured and fed back gets done well. What gets rewarded gets repeated. Do you all know these 3 lines, or just read it in the textbook and ignored it? Come on, sir, repeat with me without turning on your mics, obviously. Within yourself or say it out loud, it doesn't matter. We need to learn APM today. That's the key objective. So say it out loud or say it in your head, doesn't matter. First point, what gets measured gets done. So you think, you do, you measure it, then only you will do it. If you do not measure it, you will keep postponing it. Second one, what gets measured and fed back, it will get done better. So that is the reason why I keep asking my students, give me proper feedback. Give me your unbiased feedback. That is why I take these things, I don't know what to call them, like where you do not disclose your name or anything like that, just the feedback. I won't even know who gave that. Okay, such kind of authentication, maybe, I don't know, undisclosed, whatever you want to call it. So I take these kind of feedbacks. Okay, so what gets measured and fed back? Feedback is very important. Then only you can become better. That's the key there. And third point is what gets rewarded. Anonymous, yes, thank you for the word. What gets rewarded gets repeated. So just because you are taking feedback, it doesn't mean you can improve yourself. There has to be a reward for that. That means for me, a positive feedback is a reward. It's the reassurance that, yes, my students actually love me. Yes, the thing that I'm here for, providing knowledge to the students. Yes, it is actually reaching them. Oh, sometimes the students may say, sir, your concepts are damn good, but then why don't you do past papers? Why don't you do problem solving in the class? So I know my goal. My goal is not to make you pass an examination. That's a, we can say, byproduct. My goal is to make my students more knowledgeable. So if you pass the exam with that knowledge, that's just a byproduct for me. It's an added advantage for me. So there is this conflict of thought process between different people. Short-term people may think that, yes, mere ko ye exam pass hona hai, I just need to pass this exam. But for me, it's more important. See, my students, when they go to interview, the interviewers actually ask my students, where did you learn these things? I can give you that assurance because there are 3 or 4 students who have actually came right out of the interview hall and they called me up and they're like, sir, I just completed my interview. I did not even talk to my parents. You are the first person I'm calling you. I want to tell this to you. The interviewer is actually genuinely surprised by the amount of conceptual clarity that I'm having. One of my students who went after taking my SBR classes, she went for an interview and they asked a question on intangible asset. She was able to say 40 minutes. She was able to talk 40 minutes in the interview on intangible assets. So that is the kind of like interview itself is very difficult. I guess most of the students get panicked. 40 minutes she spoke. They're like this. So basically there's difference in that. So what gets rewarded when I hear these things from my students, that is the reward for me. It gets repeated. So I'll try to put more efforts so that the next batch will be even more better. So what gets rewarded gets repeated. Same thing happens with employees as well. You know, if you find a good employee who is hardworking and who is effective, who are able to deliver results, give them promotions, give them salary hikes, give them recognition, give them an best employee award. So when they get rewarded, they will repeat their performance. Obviously, their performance will be improved, right? So what gets measured gets done. What gets fed back, measured and fed back gets done well, and what gets rewarded gets repeated. And so which one should we focus on? Should we focus on short-term achieving results, or should we focus on the long-term growth? Both are important. Many students think that, yes, sir, short-term is fine, sir. Our thought process is long-term. As long as you do not meet your short-term goals, your long-term goals will keep moving farther and farther away. So if a company doesn't make profits, it cannot maximize its shareholders' wealth maximization. You may say, sir, profit maximization is only a short-term goal. I need wealth maximization, sir. Haan, bhai, but in order to sustain in the business, you need to make profits. Otherwise, if you are only focusing on shareholder wealth maximization, and if you are incurring initial losses, your shareholders may actually leave your company. They might just sell off their shares and go to another company, invest in another company. So to protect their interest, if you are looking at long-term wealth, but you also need to achieve short-term goals as well. Both are important. We need to make sure our short-term and long-term goals are being satisfied. Sir, but then sometimes we have to choose between these two. Then what should I choose? If there is a conflict between your short-term and long-term objectives, then yes, you might have to give a little bit of advantage or a little bit of more importance or more priority to the long-term goals. Are we clear, sir? Good. Chalo. Next one. CSFs. What are critical success factors, sir? In simple language, critical success factors are the reason for your success. You cannot go wrong in them. You should not go wrong in them. You should not compromise on your critical success factor. Sir, see, for example, APM is there. I teach APM in 45 hours, 50 hours. So in this 50 hours, if my limit is 50, I do not want to increase the number of hours. I'll tell you the reason, sir, why my lectures are compressed a lot. Simple answer is, most of you are working, right? Aren't you? How many of you are working, sir? Either working or else having full-time classes in college. So you hardly get like a couple of hours every day. All of you may or may not be, you may say this out loud or you may not, but majority of you cannot spend more than a couple of hours for learning. Maybe there are some students who I specifically tell them, take a break of 1 year after your studies. It's okay. You got graduated. You are not doing a job. It's fine. Wait a year, finish your ACCA, and then you start your job. I have told many students to do that if their economical condition in their homes are good. So it depends from student to student, sir. But most of the students who are doing these professional papers of ACCA, they get hardly 2 or 3 hours every day. So I cannot stretch the lectures much. So in this 45 or 50 hours that I want to do, I usually keep a maximum limit of 60 hours. So that even if they can spend 2 hours every day, they can complete the coaching in 30 days, 1 month, and 1 month they can put in preparation. That is my simple calculation. Anyways, coming back. So if in this 60 hours, I can either deliver the content and expect the student to solve the problems and do the questions, or I can reduce the content I can make it less explanatory and add some more problem solving. But then that would mean I'm giving up on my critical success factor. The reason why my students like me is because of the way I explain the concept to them. When they do the questions, they already know the concept. It doesn't seem something new to them. So my critical success factor for me is basically the explanation that I give. So I cannot compromise on that to add some new option or a new feature to them. So critical success factor, that one reason why you are successful, and that reason should not change. It can either improve, but it should not decline. And at the same time, it should not go wrong. Things should not go wrong. Sir, if suppose there is a topic which I do not know how to explain, I only don't know that topic, sir. If that is the case really, then my critical success factor is gone. I'll not be able to succeed, right? So that is your critical success factor. So CSFs can come from internal reasons, external reasons. If I'm taking right now, we are doing this class on Zoom, right? If I ask you 3 years ago or 4 years ago, nobody knew about this Zoom. Only corporate offices or, you know, this international companies and all, they used to need this kind of video recording softwares or streaming softwares, etc., etc. But Zoom has become so popular only during this lockdown, COVID time and all that stuff. So that became a critical success factor. What was the CSF for Zoom, sir? People's inability to come out and meet in person. Is that really an internal CSF? Did company do something to achieve that? No, it's an external reason. So whether it is because of external factors or internal factors, we need to understand what is our success factor? Why are we succeeding? And that should not go wrong. Are we clear, sir? Yeah, good. Sure. And then we just discussed that, sir, what gets measured gets done. If you do not measure, then you will not do it. You will just keep on procrastinating it. So how do I measure my CSFs? So for that is the reason why you have KPIs, key performance indicators. These are the metrics. I'm repeating, these are the metrics that we use to measure our CSFs. Okay. These are the metrics that we use, the scale that we use to measure the performance in our CSF. For example, in my personal case, my CSF is my ability to teach the concept in a very simple, understanding and more effective manner. So how do I measure that? So I take constant feedback from my students, give me star ratings or give me feedback. Tell me, is this really up to that level that you expected? Or do you think I can do something better in this area? So key performance indicators are those metrics that you can keep to measure how you are evaluating your CSFs, right? Then talking about benchmarking, sir, recently only, like a couple of days back only, I taught this benchmarking for CMA students, CMA US students. So the one thing that I tell them, see, for benchmarking is basically, benchmarking is nothing but what our parents do to us all our life, comparing with Sharma ji ka beta or Sharma ji ki beti. They keep comparing is with that one Indian guy or that one Indian girl who always performs better than us. No matter whether we score 99, they get 99.5. They get 99.1 at least. They always beat us, no matter how much we achieve. Right? You get, like, you go and buy an Audi. Your parents will be like, "Arey, they got BMW, yaar." Or you buy a duplex house. They'll be like, "They bought a villa, you know." So no matter what you do, there is always someone who does better than you. So comparing that is called as benchmarking, simple language. So how do we do benchmarking, sir? It can be with a better competitor. It can be with the best player in the industry. It can be with an average of the industry, other competitors and other players in the market. We can take an average of that. Or you can compare with your previous year results or previous period results. Or you can also compare with your set targets. I can create a target upfront and then I compare my actuals with my targets, variance analysis. So benchmarking can be done with anything, your competitor, your friend, or it can be with yourself. It can be with your predictions. So you can do benchmarking with any of this or an average, whatever works for you. But what are the stages involved in that? So first you need to understand the areas which you want to benchmark for. So I want to compare myself or my organization in these areas. For these things, I want to do a comparison. So for all those things, identify what are the KPIs, how do you measure them? And for these KPIs, set some partners, select some partners, means whether your competitor, industry average, best player in the industry, whatever it is. Then measure the performance using the KPIs that you have chosen. Then compare the difference, measure own performance, and then identify the gap, and then decide the actions on how to close the gap, implement and monitor those actions. So first one, I need to understand in which areas I should compare. Then I should also understand how do I measure and compare that. Then select a competitor or select a benchmarking standard. Then compare their performance with my performance, identify the performance gap, then try to close the gap, and what are the actions that I need to implement, what are the strategies, and then keep monitoring whether that implementation is properly happening or not. The chain of benchmarking. Are we clear, sir? Everybody chat section में clear bolo, so that I can move further. Yes, good. Sir, I'm trying to reduce usage of Hindi so that universal it will become more universal. Chalo. So advantages and disadvantages, sir, this is common sense. I'm not going to worry much about it. Advantages is benchmarking talks about it gives you an advantage, it gives you a current strategic position, it helps you understand where you stand exactly. How do you reduce the gap with your best performer? How can you improve your business process? What are they doing that you are not doing? How can you close the gap? So all that stuff, it helps you in improvement. Whereas disadvantages, it can kill the motivation, it can kill the spirit. It is backward looking, it is not forward looking. So we compare only something that has already happened. So it only talking about history, but your future plans are much better than your competitor. You should not get demotivated by looking at that. So all this stuff could be the disadvantages. But what areas am I looking at? Am I looking at the right differences or am I looking at wrong differences? Right? If suppose, let's take Pujara as an example, sir. Cheteshwar Pujara, our cricket player, test player. So he should not compare himself with someone like Rishabh Pant. Rishabh Pant average, or we can say his strike rate is more than 100. He hits 4s and 6s and gets out somewhere. Pujara is more consistent. He plays 200 balls and scores only 30 runs or 40 runs. He's a test player. So you cannot compare these two people and say that, yes, this guy is a better player than that guy. No. Can you compare Virendra Sehwag and Rahul Dravid? They are two legends in Indian cricket team. So you cannot compare these two because their areas of performance are different. Am I making sense, or cricket is irrelevant for you guys? Right? Okay. Chalo. So what are the areas that we are comparing is also very important. And then is it really worth the time and the cost or not? I can do comparisons or I can understand where we are lagging and all that stuff. But all this exercise, the time that I spend on that, the cost that I spend on that, is it worthy enough or not? That is also a point to be considered. So these are all different advantages and disadvantages. So you can see the different types of benchmarking. Internal benchmarking, we do benchmarking with ourselves. Competitor benchmarking, you compare your results with your competitor. Process or activity benchmarking for each process. But please understand the key point here, sir. Process and activity benchmarking is done even though they are a non-competitor. Sir, what do you mean by non-competitor, sir? It means suppose you are in, right now I am here. I am providing academic services or educational services. I am comparing myself with a software company. Sir, how can you do that? You are comparing apples and oranges, isn't it? Is it worth it? Does it make sense? Absolutely, yes. Sir, I'm not comparing revenues or expenses or anything like that. Maybe I'm comparing something like a particular process, maybe my hiring process. Maybe this one particular software company, they hire very nicely, or their marketing strategies are very good. So maybe that one process I can compare mine with a non-competitor also, someone other than my industry also I can do benchmarking. That is process or activity level benchmarking. Okay. Then what are the different models that we use in performance management process? Sir, your regular things, SWOT analysis, something that we have been learning since our childhood, I believe. strengths, weaknesses, opportunities, and threats. So that is okay. I know my strengths, I know my weaknesses, I know the opportunities in the market, I know the threats that I can face. That is not the key. The key is you should pursue your opportunities. You should match your strengths with the market opportunities. Means use your strength to exploit an opportunity in the market. Convert your threats into opportunities. How do I convert a threat into an opportunity? Convert a weakness into a strength. How do I do that, sir? Simple. See, right now, for example, my threat or my weakness, I can say it's a weakness more, not just a threat. It's internal. So my weakness is I have limited number of hours and I have too many things to do. Simple fact, I teach like more than 10 papers of ACCA. So how do I, if I do live classes, it's impossible for me to teach so many hours every day. So how do I convert that weakness into a strength? So I switch to recorded lectures so that any student at any point of time from anywhere in the globe, they can access the lectures. So a student is just traveling from office back to home or in the metro, or else they are going from one location to another location, or they are traveling 6 hours for meeting a relative. They can spend that time on accessing the lectures, recorded lectures, they can attend. So we are converting our weakness into a strength position here. So like that. So SWOT analysis means not just knowing strengths, weakness, opportunity, and threat. It is also how you use them or how you overcome them, right? Next comes our Porter's 5 forces and your test analysis. I believe we have already discussed about this. So Porter's 5 forces talks about industry level. Look at the first line, sir. First word of Porter's 5 forces. Industry level. Porter's 5 forces we do to a particular industry. If you see my actual APM lectures, I guess Vivek can explain that. Vivek can acknowledge that. So in our regular classes, what do? We take 2 different industries. Maybe for the recorded lectures, I believe I took soft drinks and airways, soft drinks and airways, I believe. So we take 2 different industries and then we analyze them. So what is the level of competition in soft drinks? What is the level of competition in airline industry? And how are these 5 different forces? Are they strong or are they weak for a particular industry? So just to give you an example, if suppose I'm in the airline industry, okay? In airline industry, do you think the threat of substitutes is high or low? Means for airline industry, if you are an airline company, what are the substitutes available for airlines? You can either use waterways or roadways, but are there really substitutes for airlines? No. Sir, if I need to go from Hyderabad to Delhi via airways, it's going to take me 3 hours. If I do the same transport over road, it's going to take me 3 days. If I'm exaggerating it a little, but maybe it's going to take me a day and a half, maybe at least. If I take breaks and go, then 2 days. So is it really a substitute? The threat of substitution is very less. But if I talk about soft drinks, the threat of substitutes is damn high. People actually do not like soft drinks these days. They are like, Nene, I don't want soft drinks. I want more energy drinks, or else I want more fruit juices, or I want more diet related drinks. They are substituting more. Soft drinks are getting substituted easier. Similarly, competition. Sir, airlines have lesser competition compared to soft drinks. Obviously, you have hundreds of soft drink companies, but then you have hardly 10 airline companies. So like this. So a particular industry is analyzed, the competitiveness of an industry. Is it attractive for me to enter that sector or not? That is defined or designed or evaluated using Porter's 5 forces. Depends on the players in the industry. Absolutely, yes. Sir, see, threat of new entrants is there, right? Threat of potential entrants or threat of new entrants. In airline industry, technically the threat of new entrants is very less, because nobody can just like that start an airline company. It's not that easy for everybody to come and create an airline company. But then the people who are actually the new entrant that we are talking about, the potential entrant that we are talking about, is someone like our late Rakesh Jhunjhunwala, the big bull of India. May his soul rest in peace. May he find all kinds of eternal glory. If people like him are actually entering into airlines, sir, because before he passed away, he actually started an airline company. So the threat depends on the player. Well said, Kiran. The threat actually depends on the player. Akasa, yeah. Chalo. So I hope this is clear. The Porter's 5 forces is for an industry. So what are the 5 forces that we talk about, sir? Threat of potential entries, bargaining power of customers, bargaining power of suppliers, competition, rivalry of the competition, and threat of substitutes. So potential entrants means if new players are coming into the market, it becomes difficult for us to compete with them. Bargaining power of customers. Customers are bargaining a lot, so we cannot make much profits. Bargaining power of suppliers. Suppliers are not giving us discount. We will not be able to compete in that industry. Substitutes. There are too many substitutes. Competition is higher. It is less attractive. Competitive rivalry. Same thing, sir. Too much competition in that industry. It is not favorable for you to enter into that. So Porter's 5 forces, most of the time, this is used by companies who plan on entering into a particular industry, or companies who are already in the industry but then want to know, should we continue in this or should we change the industry? So that is the area where we do Porter's 5 forces analysis. Then coming to pest analysis, sir. Pest or PESTLE, it's the same thing. It talks about the macro environment of your business: political, economical, social, technological, legal, environmental. So how are these external factors, how are they going to impact my business? How are they going to, we can say, can also we do a very quick KPI exercise for these 2 models, them being the most important. Okay, good. Let me just make sure I'm on the same page with you. KPI exercise as in you want me to tell you certain KPIs that I need to choose, like what are the metrics that we are going to choose for each of these? Or you can unmute yourself and say it out loud, no problem. Yeah, for each element. Okay, makes sense. But it's not really a KPI as such, but yes, I understand. KPIs on non-quality factors as well. Absolutely, we'll go to that. Your chapter number 11, 12, 13, I believe. We'll do that, no problem. 13 used to be corporate failure, my favorite topic, which has been removed from the syllabus altogether. But yeah, let's do that, no problem, sir. When we reach there, we'll definitely do that. But for these 2, Porter's 5 forces and pest analysis also, KPI. Okay, cool, no problem, I'll do that. So now political, economical, social, technological, environmental, and legal factors are there. How are these external factors going to impact and influence our business? What kind of threats or opportunities do we get from these external forces? That is what we need to evaluate. Now coming to Vivek's question on how do we create KPIs for these things. So coming to first, Porter's 5 forces. Threat of potential entrants. There is no direct KPI for this as such, but we can consider a KPI like how many new players has entered into the industry over the last 1 year. New players in the industry in the last 1 year. So that can tell me how easy or how difficult it is to enter into this industry. I want everybody to confirm after each step. Understood or not? Do you guys agree to this KPI, sir? Threat of potential entrants. Number of players entered into the market in the last year. Okay, next one. Bargaining power of buyers, my customers. I can say discounts given to the customers. Or what is the list price versus what is the average sales price? My list price means the MRP or the price you want to sell it to. Actual sale price means it talks about the real sale price that you are able to sell after the bargaining by the customer. So the difference between these 2 will tell you how much bargaining power our customers are having over our business. Moving on. Threat of substitutes. Threat of substitutes ke liye I will consider number of substitutes available. The closeness of that substitutes. Like, are they able to match us in major elements or not? Do we have anything that differentiates us from our substitutes? Number of substitutes, consider that would be a more easier example. Competitive rivalry, market share. Suppliers bargaining power. Same what we did with customers, do it for the suppliers, sir. What was the listed price and at what price did we buy it? What is the discount that we got over the list price? Are we able to bargain much with the supplier or not? Or are the suppliers able to give us discounts? Or, I mean, are we able to get discounts from our suppliers or not? Yeah, that makes more sense. Discounts received. I believe your question is answered, Vivek. All the 5 KPIs for all the porters, 5 forces. Perfect. Good. Next, coming to pest analysis. So political influences. Sir, understand one thing. Pest is not numerical in nature. Pest is a scenario analysis. It's an environmental analysis. You do not have KPIs for this as such. But if you want to figure out KPIs, maybe we can do that, but it doesn't make sense. It's more like trying to combine 2 pieces of glass together. It doesn't make sense. So it's more analysis. What are the political factors that can influence your business? Scenario based. Yes, it's scenario based, and it doesn't have KPIs as such. See, technological influence is there. I can say, yes, technology has a great influence on the business. No, technology isn't really big deal in this business, but I cannot measure that. There is no scale to say how much you are going to get impacted by technological changes. Pest analysis is more like a scenario analysis. It's not numerical, it's not KPI related. We can see, for example, just for you to understand, I'll tell you, if at all, if I really try hard to get any KPI, political influence is there. So political influence ke liye, I'll take one small legal wala example. Suppose if ITC company is there, Indian Tobacco Company is there. If Indian government creates a ban on tobacco products, what will be the impact on ITC? What is the turnover decline that we are going to see? At the same time, if government removes GST on tobacco products, what is the potential growth that we can see? You may measure them, but they are unrealistic measures again. Are we good? Sure. Next comes our Boston Consultancy Group, BCG matrix. Sir, understand something. Boston Consulting Group is an external group of business analysts, business ideologists, or you can consider whatever you want to call them. They are basically external consultants, business consultants. So they give you ideas on whether, okay, you go to them and they'll be like, tell me what are the products that you are selling. Achha, you have A, B, C, D, E, F, you have 6 products. Give me these factors, okay. They'll do certain analysis and they'll be like, okay, drop off your product D. Next year onwards, do not produce product D. And then whatever money you are saving there, you invest in product A. So they just understand your businesses, or we can say your strategic units, okay, your business units, SBU, strategic business units. It could be a product, it could be a division, it could be a branch, it could be a subsidiary, it could be a department in your own business, whatever it is. Your units of your business are there, strategic business units. So they will do an analysis of that and they'll categorize them into 4 quadrants. What are those 4 quadrants, sir? Quickly, you have your star quadrant. Oh God, let me use this. You have your star quadrant, you have problem child, you have your cash cows, and you have dogs. Very quickly, sir, what are stars? These are the things that have the highest amount of market share and highest amount of market growth. You are already capturing majority of the market and you are also having good growth potential. So basically, this is what every business wants. There should be scope for growth and we should be the major player in that. We should get majority of the sales revenue. So throw your money into this. Put as much money as required into stars, provided that reinvestment can actually be spent effectively and it gives you returns. Okay, so if that is the case, go with your stars. Put as much money as you can in that. They give you higher ROI, return on investment, and they also have good market share. Yes, ROI, correct, good. Then talking about problem child. Sir, we call it a problem when things are actually going right for everybody else except for us. Market growth is there. Everybody is growing. Our industry is growing. But I don't know why our company is not growing. We are not able to capture market share. Market growth is high, market share is lesser. That is a problem child for us. We need to understand, if we invest money, will we be able to get that market? We will be able to increase our market share, and can we push it to star? Or should we increase our effectiveness to convert this problem child into a star? Our end goal, end of the day, we want this problem child to be converted into a star, right? And then what are these cash cows, sir? Cash cow. Why are we using the word cow here? We milk the cow, right? We extract the milk from the cow. It's the process is also called milking, by the way. So we milk the cow. So cash cow, what we try to do, we just try to get as much cash as possible from this. This is an industry where we already captured majority of the market share. So we have very high market share, but the potential for growth is very less. You cannot grow there. So in that case, when you do not have future potential, do not try to invest much in cash cows. Keep the cash flows minimal. Means investment in that should be minimal to run the regular operations. Do not spend on marketing, advertisement, and all that nonsense. Right? So cash cow, you try to extract as much cash as possible. Keep that running without spending too much on marketing, advertisements, etc., etc. There is nothing that you can do to increase the market growth, sir. Market growth is determined by the consumer, not by you. And the last one is your dog. I'm very sorry to say this, sir. I like dogs, but there is a saying that take the dog back in the yard and shoot it in the head. Something like that. Can anybody just tell me what it is called? There's this saying, na? When things are not going right, just take it to the backyard and shoot it between the eyes. That's a very bad saying, such a dark saying. Yes, it's very dark saying, but then that's a terminology that people use. Not here in India, at least here in India, people do not say that. But I heard this, some movie or something like that. I don't remember. But then dogs are basically where there is no market growth and there is less market share. Less market share, less market growth. You are not growing, industry is also not growing. There is no point in continuing in putting money into that unless you think that yes, we can grow. But it's very bad. Situation is very worse. So the thing to do is exit as quick as possible. Just push the red button and fly out of it. Right? So those are your 4 quadrants. So what to do in each quadrant? That is also an important thing. If you do not take proper action, your cash cows also will become dogs. Okay, so you have to be very careful about these things. Do not let your cash cows or your problem childs go into dogs. You do not want that. You want your problem childs to become stars. You want your dogs to become maybe problem childs or not problem childs as such. You want your dogs to become cash cows, but it's very difficult. The industry is not growing and you are also not able to capture the market earlier. So is there a potential for you to capture the market and increase your market share? If yes, you can convert dogs into cash cows. If no, you need to exit out of that. Am I clear, sir? Or am I going too fast? Good. Chalo. So advantages and disadvantages, it's very easy. It's mostly important for portfolio analysis. It is not a performance measurement tool. And what is high, what is low? How do I determine whether market share is high or low? How do I know that? There is no definitive answer. And it does not link different parts of the business and may encourage holding rather than growth strategies for cash cows. So in cash cows, what do we say? We will be like milk them as much as possible, extract the cash. But what if there is a potential to increase the market growth as well? There is a potential for market growth. Why are you not exploiting that? Why don't you renovate the product and launch it as a new one? Those kind of things. Yeah, generic ones. Then Porter's 2 generic strategies we have already discussed: cost leadership and product differentiation. Cost leadership ka best example OnePlus. I have been using the same example for eternity and it is still relevant to today also. But I guess I cannot say that after maybe another iteration of OnePlus, I believe. Already they are now competing with Samsung and Apple with regards to their price levels, right? Now OnePlus is also like 65,000. I'm like, God bless India. OnePlus started at what, 21,000. Suddenly they were like 65 pe chala gaya. They tripled their prices. Apple 13 ka basic version you get at 65,000 right now, I believe. I don't know. I'm not sure. I'm not a big Apple person. Not version is not good. Yeah, they still have this mediocre, or I guess not even medium range. They are budget smartphones. They're calling them as, but no, they do not give you that feel of premium phone. But then what they started with has been gone. Huh? Anyways, coming back. So next topic for our discussion is risk. Sir, this is newly added in your syllabus. This was not covered in depth earlier. Now they are going to cover it in depth. So pay attention. We started with 11 and now there are 8. Is it network issue or people are getting bored and leaving? I don't know. Okay. Chalo, so we have, I'm trying to make it the face cam a little bigger so that people on the YouTube later, when they see the recorded one, they can see it. Okay. So next one is risk. So risk and uncertainty, these two are very, I can say people use them interchangeably a lot, right? People just use the words risk and uncertainty together or one word instead of the other, etc., etc. So what exactly do we mean by risk? What do we mean by uncertainty, sir? Risk is something that can be measured. Uncertainty means something that is not quantifiable. As simple as that, sir. Keep it simple. Do not try to complicate it. Risk means something that is a measure. The outcome is known. Whereas uncertainty is where each outcome is not known. Sir, outcomes are known. The probability of each outcome is not known. Suppose if I toss a coin, I know that possible outcomes are either a heads or a tail. So the outcomes are possible, but the probability of that I can measure and I can say 50% heads, 50% tails. So that is a risk situation where the probability is known. But if I do not know that, sir, suppose I start a business, what are the chances of making a profit? You cannot say 50-50 chances are there. It's not equal. So what are the probabilities? If you do not know those probabilities, it's called uncertainty. And then what are exogenous, sir? Exo means external, outside variables which are out of our control. Endogenous variable means which are internal our organization, which are within the control of the management. So major thing that you need to understand is every business should try to reduce their uncertainty, sir. Risk reduction is okay. Risk assessment, risk planning, all that stuff you can do. Mitigation of risk. In SBR, you will learn TARA framework. Transfer, accept, reduce. What's the other one? Vivek, can you help me out here? Transfer, accept, reduce. What's the other one? Accept, reduce. 3 to 5. What is the fourth one? That is what I'm asking. Avoid. Okay. Avoid. Thank you, man. I don't know. I get zoned out a little sometimes, but yeah, avoid. So risk, we know we can do these kind of things. We can either transfer it to somebody else by taking an insurance, or we can accept the risk and just say that, yeah, this probability is very less, so let's ignore that. Or we can say we try to reduce that by hedging our position, or we can avoid it altogether, not doing that business. So you have different approaches towards the risk. But what do we do with uncertainty? If my business is having uncertainty, what am I supposed to do? Simple, sir. Gather as much as data as possible, try to find out the possible probabilities, and then convert uncertainty to risk. You do not know whether your business will run into a profit or a loss. But if you do the same business for 10 years, then don't you think you can say that the probability of making 1 lakh profit is 50%. Probability of making 10 lakhs profit is 10%. Probability of making 2 lakhs loss is 40%. Can you say this after doing the same business for 40 years? So 10 years? Absolutely yes. Or do an analysis of the profitability of the industry, competitors and other players in the industry. Go to a particular industry, look at your competitors, track their history, and then find out. So gather more data and convert that uncertainty into a risk situation. Then you can apply your risk related whatever framework that you want to apply, like Tara framework related. So in risk and uncertainty, you have the first topic, which is expected values, which is nothing but probability into the value, and then total up that. Right? Maximax. Sir, what is maximax? Maximizing the maximum profits. These are the people who take the highest amount of risk. Maximin. Even in the worst case scenario, someone is trying to make the maximum profit. The conservative guy who is trying to maximize the minimum profits that they get. And then minimax, regret. Having the lowest regret possible if things go right. I choose decision A, but things went right with decision B. What is the maximum regret that I have, or lost profit? So maximax is for risk people or risk taking people, risk seeking people. Whereas maximin is for risk averse people who try to avoid risk or who try to take less risk. Minimax regret is who are worried about taking a wrong decision. I guess we are running behind of time a little. 4:30. Oh boy. Half of the time is done. We are still in chapter 1. Okay. I thought it's 4. Next. So you have your stakeholders. So this is something that we have been doing since childhood, I believe. Shareholders, employees, managers, venture capitalists, banks, all these people, different people who give money to your business. Basically, we are talking about one category of stakeholders who are investors. So shareholders would be going with maximax, or they would go with maximin, or they might also go with expected values if they are risk neutral. Employees and managers, they are more risk averse, so they would want maximin. If they are risk seeking, they would want maximax. Venture capitalist, they want less risk and more return, so obviously they'll go with maximax. Banks, they follow more conservative approach, so they'll go with maximin or expected values. Like they give loans to different people. There are hundreds of people who take loan from a bank, so they go with an expected value, an average probability determined value. So that is our first chapter, sir. Please, before you think that, sir, too much time we have taken for one chapter, that's okay. The first chapter is the longest chapter in your entire syllabus. Wouldn't they give this in the scenario though? They would, sir. They would give it in the scenario. They will tell you these people are risk averse. So these people seek risk. They want to maximize their profit by taking more risk. They'll tell you in the scenario. So then you will determine, yes, maximax is suitable or maximin is suitable, expected values, which works for them. You determine that based on the scenario. Okay. Good. Next one. So this is the most easiest one. We should be able to complete this in next 5 to 10 minutes. Environmental, social, and governance related factors. So environmental mein, you have this EMA, environmental management accounting. So I believe there is this oil spill related example that is given for you. Examination point of view, I would say 0 to 2% importance for this particular topic. Environmental management accounting, very rarely tested, and even if tested also, this has no conceptual clarity or anything like that. Common sense only. You do not spoil the environment. You need to make sure that renewable resources are more used, or your input output ratios, all that nonsense. Grade 3 EVs, yeah, all your regular normal things only. There's nothing out of the box that you need to learn as a concept as such. So stakeholders, different groups of stakeholders. So your internal stakeholders, external stakeholders. So all that, your Mendelow's matrix basically. And then CSR activities that you have to conduct. So let's just talk about that. Mendelow's matrix. So power and interest matrix, right? So you need to know the other words or other terminologies of this. When people say Mendelow's matrix, the first thing that comes to my mind is Mendelow's means power interest matrix. Power and interest. Similarly, if people talk about BCG mein, basically it is growth and share, growth share matrix, whatever. So you need to know what are the factors or what are the criteria covered in those particular methods. Okay. So Mendelos talks about power and interest. So your stakeholders will be classified into these 4 categories. So if there is a people, if there is a group of stakeholders who are having high level of power on your organization and are also highly interested in your company. So they have high power and they also have high interest in your company. They are the key players. So you should follow their expectations. You should meet their expectations. Similarly, if they have high power, but they have less interest in your company, maybe something like central government, I can say. You guys understand central government things, sir? Indian students, so definitely they'll understand. You have state governments and central governments. Maybe something like local level government and national level government. Okay. Amay says lol. I don't know why. Is it for, do you understand central government? Is that the question? I mean, we have some student from Malaysia, so I just wanted to be sure they understand that. But yeah, so if we are talking about national government, central government in case of India, so we need to keep them satisfied, sir, because they have high power on us, but they're not really greatly interested in our company. But if I'm talking about state government, acha, okay, no problem. So if I'm talking about a state government, oh, okay, cool, no problem. So if you're talking about state government, so they also have high power, but they are also highly interested because we are giving jobs for the jobs in our particular state. So unemployment ratios, etc., standard of living in the state, all those things depend on this. So they are highly interested in your company as well. Similarly, if I'm talking about a small share, major shareholder, a major shareholder would have high interest and also high power in your company, voting rights. Similarly, if I'm talking about a small shareholder, sir, he's investing like 2 shares or 3 shares randomly purchased. So he's neither interested in the company nor he is having any power in the company. So those people, you need to put minimal effort for them. You do not need to worry about those people. But if they have high level of interest but low level of power, I can say retail investors with less capital. Yes, public interest groups as well. Retail investors. So for example, I am there. I have a capital of 5 lakhs. I purchased, let's say, 100 shares of Reliance by paying 2 lakhs. 100 shares, yes. I get 100 shares by paying 2.5 lakhs, actually 2,60,000, 2,600 or the share prices. So for Reliance company, 2.6 lakhs share capital is nothing for them. Hundreds of crores of share capital is there. 2.6 lakhs for the company, it's nothing. Sir, but for me, it's a huge deal. My entire net worth is 5 lakhs. I invested 50% of my capital in that business, in that company. So I have high interest, but the power I have over the company is very less because there are crores of shareholders. So such kind of retail investors, the company tries to keep us informed by giving us financial statements, audit reports, etc., etc. Next one. So what are the stages involved, sir? First, identify who are your stakeholders. Let me just switch to this. Yeah. Identify your stakeholders. Then consider the level of power and interest. Using the matrix, just classify the different stakeholders into 4 quadrants. Then discuss and decide your priorities. Who should be the key players? Who should be this levels? And if there are any conflict of demands, then you have conflict resolution in your APM, right? So negotiate with them, or else give them in a sequential order, circular orders, like first time this people, then next time that people, like that. Basically, you have different things. But mostly we go with negotiation, and if nothing works, then the last step of action for us would be exercise of power. Then develop the mission and strategic objectives with the stakeholders' needs in mind, CSFs and KPIs, then monitoring tactical and operational objectives, and then monitoring of those objectives. It's common steps, nothing new here. Then comes your environmental, social, and governance factors. So normal ethics, there should be ethics for every business ethics should be followed. Your corporate governance. So please understand, corporate governance related, you have been learning from so many years, right? For so many papers. Audit and assurance में तो half of the syllabus is on corporate governance only. Executive directors, non-executive directors. Executive directors are led by the CEO. Non-executive directors are led by the chairman. Executive directors are involved with the day-to-day operations of the business. Non-executive deal with more like strategic decisions, or maybe more important decisions, crucial decisions like appointment of auditors, appointment and removal of directors. They form all the committees: audit committee, remuneration committee. Do you remember all that stuff that you learned in audit and assurance in related to corporate governance? Yes? Okay, cool. So most important and crucial thing here, according to me, would be the sustainability related discussion, sir. See, sustainability related, there are so many things that are happening in the world right now. I don't know if you guys know this or not. Integrated reporting is there in your syllabus now. They have been talking about integrated reporting since forever. Let me just pull it down. Yeah, here. So right now, integrated reporting related, there is no globally accepted framework for reporting. Sir, I have been saying this since ever to my students. Please understand, guys, through YouTube also I'm trying to tell this. International level pay, integrated reporting, there are no standardized formats yet. They're telling you the 6 capitals and 6 capital related, you have to give disclosures and all, but the format, the structure, the content, mandatory elements, voluntary elements, these things are not yet standardized. Integrated reporting is still under discussion. Okay, please be very careful, be informed in that area. So you have 2 frameworks right now. One is the usually used one, the GRI, and the other one is the UN's Sustainable Development Goal, SDG. So the one that I teach in my class is from the Global Reporting Initiative Standards. If you remember, Vivek should be able to say that. So I actually teach integrated reporting from the GRI page only, from the Global Reporting Initiative website only, we teach that. But then UN also has their own version of the integrated reporting, which is covered through SDG, Sustainable Development Goals. So they're also coming with some other alternative to that. So yet to be finalized, it is still under discussion phase. So let's not worry about it. Coming back. So sustainability is very crucial factor, sir. The possible definition, sustainability means what? You have to survive for a longer period of time without compromising on the goals and needs of the future. So right now you are trying to maximize your profits and all, but also keep in mind, future generations also should sustain. So do not use up all the natural resources. Do not consume all available resources. So keep the 3 P's, your planet, environment, people, the social factors, and profit, economic. You need to make a balance of these 3. Most of the companies fail to balance the environment, sir. They are fine at balancing people, they're fine at balancing economy, but they fail to balance the environment. So the 3 P's, planet, people, and profit. All the 3 you have to be carefully doing it, or you can call it SEEC, social, economic, and environmental. You need to be careful about that. And the triple bottom line, these three SEE that we spoke about, social, economic, and environmental, you need to consider these 3 profits. Do not just look at the economical profit that is shown in your profit and loss and other comprehensive income statement. Be more focused on social and environmental reasons as well. So arguments for ESG, arguments against ESG, should we consider economy and all that, sorry, environment, social and all that stuff, or should we not consider them, blah, blah, blah. Common points. I'm not going to discuss much on that. So identify the CSFs and establish KPIs, measure the performance, report and controlling the performance, regular sequence of steps with relation to environment as well. So let me tell you one more use case here, or real life example here. India has this concept of environmental audit. They introduced the concept, every company that is getting financial audit should also get an environmental audit done. But then they had to drop it out because no auditors were there who can say, yes, this company is environmentally following all the rules and regulations. Suppose if I'm doing financial statement audit, I can say, yes, the financial statements are prepared as per the applicable financial reporting framework and are presenting a true and fair picture or not. But I cannot say such things with environmental audit. What are the standards? Kiske saath compare karo? What am I supposed to compare this with? Financial statements I can compare with IFRS, IAS, INDAS or whatever standards. What will I compare environmental performance with? Is there any rule? Is there any stick? Is there any measurement scale? Nothing. So such kind of things are there. These are only on the books. In real life, this won't happen. So you have your mission statement. Your mission statement also should focus on sustainability. Your objectives, CSFs, KPIs, targets, whatever you are setting, do not just look at your profit maximization and wealth maximization. Also try to include or inculcate environmental, governance, and other aspects into that. Actually measure stability, align with mission and objectives, interconnectedness between different measures, balanced picture should be there, focus on areas that will have high potential impact. It should be measured over time to identify the trends of highs and lows, clear and consistent to aid benchmarking. So basically, when you do all these activities, also keep in mind the environmental and social factors. Nothing more than that they need to tell you here. Integrated reporting, the 6 capitals that you guys know. Environmental, you have natural capital, human capital, social capital, intellectual capital, manufactured capital, and financial capital. Just to be very clear, let me ask you, sir, knowledge base of an employee, will it come in human capital or intellectual capital? Both, huh? Okay. Right? So technically speaking, it should go into intellectual capital because it is thinking ability of an employee. But how can you differentiate a human being and his thinking capability? I am what I am because of my thinking capability. How can you separate me out and say that you are different and your thinking capability is different? So that is why integrated reporting does not have one single format or one single established reporting kind of a thing. Sir, currently what majority of the companies across the globe are doing is nothing but having a separate section on the annual report, sir. Separate section on the annual report means, I have it on my other laptop. So Reliance is there. If you take it Reliance as an example, Reliance is currently giving integrated reporting also within their annual report. All these 6 capitals, and they give disclosures and disclaimers regarding that, but they do not create an additional sustainability report because there is no format for that yet. Standardized format nahi hai. So right now, majority of integrated reporting is included in the annual report that the company gives, along with financial statements, audit report, and all other stuff. Chalo, aage jate. So these are all additional advantages and other stuff of IR. So I'm going to skip that. Environmental management accounting. So consider environmental costs. So 4 costs that are associated with environmental: conventional cost, regular energy consumption related; contingent cost at the end. So your decommissioning charges or dismantling cost. This should be included in the initial cost analysis of the project. Relationship cost, like producing the reports and other stuff. Reputation cost, if you do not comply with the environmental rules, what are the penalties or other things that you have to pay? So the environmental costs. So 4 types of costs. And related this only, you have been given that example of oil spill and other stuff. So EMA should also be used while you are doing ABC, activity-based costing, life cycle costing, input-output analysis. When you do those things, also consider the environmental costs. All your 4 types of environmental costs should be included. So when you do activity-based costing, your cost drivers should also include environmental costs. So for example, transport cost is there. Transport cost, travel cost or traveling charges or fuel cost, whatever you want to call it, that can be allocated to different products in ABC by using the cost driver of distance traveled. At the same time, the pollution that you are generated should also be considered in ABC. That is what they are trying to tell. Integrating ABC with environmental management accounting. Are we clear? Yes, okay. Then flow cost accounting. So flow cost accounting means in your organization, there will be flow of activities: procurement of material, procurement of labor, then procurement of overheads, procurement of manufactured capital like your property, plant and equipment and other stuff. Then you use all these things to do the production. Then there will be storage, warehouse, then there will be marketing, logistics, then sale, after sale. You have a flow of activities. So the cost should be calculated at each flow, and at each stage of the flow, environmental cost also should be considered. So for example, I have this storage. Storage is one activity in the flow cost. So in this storage space, suppose if I'm having a cold storage unit, I might be releasing certain harmful gases into the air. So for example, if I'm using AC at the home, there will be so many gases. I don't know what they're called, but I mean, I'm unable to recall the name, but there are gases that are released into there. They are dangerous for the health, and they're dangerous for the ozone layer as well. So such kind of things will be there. So when you do the cost at each flow or at each stage, also consider the environmental impact. Okay, that is what they're trying to tell you. So then you have your prevention cost, which you incur to prevent any failure from happening, prevent any damage from happening. Then you have appraisal cost, which is basically nothing but inspection, testing, etc., etc. Internal failure, before the actual outcome comes. Internally, when we are doing it, then only there is a failure. So you repair that or you rectify that. External failure means we failed something or we damaged the environment. We released some toxic substances into the nearby water body. So there is a penalty that is levied by the government. External failure cost. Clear? Yes. So moving further. So should I continue or do you need any small break kind of a thing? We are just done with 2 chapters, sir. Abhi kya break hai? 13 chapters are there, I believe. Okay. Next one, budgeting and control, sir. Why do we prepare budget, sir? So that we can have a basic idea about what is happening in the business. So it is important for us for prime reasons. Prime reasons means for planning, becoming responsible, to allocate responsibility to a particular person. When you prepare a budget, you can say this is your responsibility. Integration of all the different activities involved, motivating them. This was your budget. This is what you did. So you can do better. Come on, meet your target. Evaluation and control. You know, Acha, I gave you this much budget. You have spent over that. You have spent less than that. So I can do an evaluation. So the reason for doing a budget, preparing a budget is prime, planning, responsibilities, integration, then motivation and evaluation. And top down, bottom up. Top down means budget will be set by the strategic level people. From there it comes to tactical. From there it comes to operational. From there it goes to the employees, the workforce. Bottom up means the reverse order. Bottom up is more like a feedback thing. But the biggest problem is in bottom up, there is a possibility for good slack. There is a possibility for creating or introducing slack into the budget. Suppose if your faculty asks you in the college, I want to conduct a test tomorrow. We have completed 3 chapters. How many chapters do you want for the test? If they ask you, you'll be like, sir, only 1 chapter, only 1 chapter. You can actually do 2 or 3, but you will be like, no, only 1 chapter we'll have. So you reduce the targets yourself. So when we go with the bottom-up approach, we try to set lower standards or lower budgets so that we can easily achieve them, right? So that is bottom-up, problem with bottom-up. Now, different types of budgets, sir. First one is fixed budget. Fixed budget means we prepare the budget at the beginning of the year for one single activity, one level of units. This year, we are going to produce 10 lakh units. So what is the budget for that? Flexible budget means I'll prepare budget for different levels. If I produce 10 lakhs, what is the budget? If I produce 15 lakhs, what is the budget? If I produce 20 lakhs, what is the budget? So we prepare budget for various levels of activities. And please be careful, sir, when you prepare flexible budget, there could be fixed costs, there could be step fixed cost, there could be variable cost. Variable cost increase or decrease with the volume. Step fixed cost remain constant for a particular level of activity. And if that level of activity change, then that fixed cost also will change. Do you remember step fixed cost, sir? Suppose room rent is there. I'm running an academy. Rent is actually a fixed cost. Sir, my academy has a space for 50 students. If there are 80 students, I'll have to add more space to that. I'll have to rent a bigger space. That means my fixed cost will increase and then again it will remain constant. What if suddenly there are 300 students? Touch wood. Pray that I should reach a stage where I have 300 students in a batch. Suppose if we reach 300 students, then what will happen, sir? I'll need even a bigger room, maybe an auditorium kind of a thing. So the fixed cost increase. So that is step fixed cost. And then if you have truly fixed cost, just a parallel line will be there. You just copy that same value for all the lines. Then you have incremental budgeting. Sir, what is incremental budgeting? You take the previous period budget and then you add for inflation or any other adjustments. You take a previous period and then you build upon that. You increment upon that. That is your incremental budget. Now, if you are starting a new business, should you go with fixed, flexible, incremental, or zero-based? Zero-based means you always start from zero, right? You do not consider previous periods. You do not consider previous budget, previous actuals, nothing. I'll just start every single line from the scratch. I'll create the entire budget from a new. So zero-based budgeting is more suitable when you are starting a new business or you are planning to have a redesign of your business. Like you change the method of delivery or you had a BPR activity, business process reengineering has been done. Whenever these things are done, you go with zero-based budgeting. Or if you are already in a stable environment where you have been running the same business for last 5 years or 10 years, sir. So you follow incremental budgeting, right? Are you guys with me, sir? Do not doze off, please. Stick with me. Good. Next, rolling budget. What is a rolling budget? That keeps on rolling. Sir, what do you mean by keep on rolling? Simple. Suppose if I'm preparing quarterly budget, okay, that means every 3 months I'll prepare a budget. But under rolling budget, I do not prepare budget every 3 months. I prepare the budget every month for a period of 3 months. So what do you mean by that? Sir, if I prepare 3 months budget, if I prepare a budget every 3 months, I have Q1, Q2, Q3, Q4. This is from Jan to March, April, May, June, July, August, September, October to December. But when I prepare monthly 3 months budget, sir, kya? Every month 3 months. So Jan, Feb, March. Jan is completed. Feb, March, April. Another budget will be prepared. Then Feb is completed. March, April, May. Another budget will be prepared. So every time 1 month completes, I prepare the budget for next 3 months, or it could be 6 months. It doesn't matter. Are you following rolling budget, sir? Why do we keep doing this? So that, sir, Jan, Feb and March, 3 months ke liye I prepared first budget. So at the end of Jan, I know that, okay, this is what is budgeted and this is what actually happened. Let me tell you here itself, sir, the variances that you get now, when you prepare a budget, your purpose is to do variance analysis also, right? So when you do a variance, that variance could be because of 2 reasons. Budgeting than a method of budgeting, meaning a rolling budget could implement either increment or ZBB as its method. Yes, agree. It talks about periodicity rather than the methodology of calculation. Agree, completely agree with that. We can discard unuseful activities. We may lower the budget. Exactly, Kiran. Well said. Sir, understand something. When you get variances, these variances can be classified into 2. Controllable variances and uncontrollable. Sir, controllable means we can make changes so that we can reduce those variances. It's within our control. So reduce the variance. Reduce the adverse. But uncontrollable variances are coming, sir. Means we anticipated the sales to be 10,000 units, but actual sales are 6,000. The reason is government has increased the GST on that, taxation on that product. So now it is becoming more costly for the end user. So they are not consuming the product as much as we expected. Sir, is this in our control to do something in this regards? No. So what I need to do? I need to revise my budgets. Do you agree to that? Agree? Right. So this thing is done with the help of rolling budgets. So at the end of Jan, I do a comparison of actual versus budget versus actual. If they are controllable, then in the next quarterly, that is Feb, March and April, when I prepare the budget, I try to keep it the same way and try to control the issues. But if it is uncontrollable, then I'll revise my next 3 months budget. So to know that, rolling budget is helpful. Moving further. Next, activity-based budgeting. So usually budget, how do we do? Sales, purchases, opening stock, closing stock, cost of goods sold, salary expenses. Like this, I do a budget. But under ABB, activity-based budget, what we'll do, we'll first identify all the cost pools. For each cost pool, identify the cost driver. For each cost driver, I'll calculate an overhead absorption rate. And based on that, number of cost drivers and the expected volume of that each cost driver, I'll create the budget. So simple. For example, I have like 5 overheads. I have rent, electricity, transport cost, marketing, something like this. So how many square footage into overhead absorption rate or rent per square feet? Electricity, number of units expected to be consumed multiplied by unit rate. Travel, number of kilometers expected to be traveled multiplied with cost per kilometer. Marketing, number of hours of advertisement into cost per hour. So for each cost overhead, I will calculate the expected budget and then I'll prepare the budget. That is called activity-based budgeting. Are we cool? Then if we use activity-based budgets and then do the management, the monitoring and control activities, variance analysis, controllable, uncontrollable, and then revising the budgets or else implementing certain strategies, issuing bonuses for favorable variances, giving penalties or punishments for unfavorable, whatever it is. If you are considering activities on the cost drivers and the cost pools and all, while for management, for operational and strategical management, that is called ABM, activity-based management. So it is much more going into the details of that, but then it is helpful if you are doing, oh, they talked about ABC here, activity-based costing and then budgeting. It's the same thing, sir. The problem with ABC is, please understand this, this is the most crucial problem. I don't know how to separate ABB, ABM and ABC. All the three talk about ABC only. If your management ideologies and strategies are using ABC, it is called ABM. If you are preparing budgets using ABC, it is called ABB. Okay. ROHR, ABB, ROH, what is ROH? Oh, ABB being an umbrella. Okay, yeah. See, basically, if you use activity-based costing and then do budgeting, that is activity-based budgeting. If you use ABC and then if you use that for management decision making, that is called activity-based management. Now it's clear. Acha, okay, good. Chalo. So that is the purpose of this session now, to bridge the gaps and to fill those gaps. Always the thing that we need to consider with ABC is it will give you very accurate cost per unit. You compare it with marginal costing, absorption costing, target costing, life cycle costing. You do any other costing techniques, ABC will give you the most accurate cost per unit. But then it is the costliest because the process is so big. You have to go into the depth of each item and you have to do an in detailed scrutiny of every pool. That is a nonsense to do, right? So that is why that is the biggest disadvantage of it. Sir, imagine, for example, we are producing 5 products. Coca-Cola is there. So Coca-Cola has, I don't know why Coca-Cola comes to my mind most of the time when I talk about multiple products, but let me take ITC as an example. ITC has so many products, isn't it? They have Bingo, they have what is that, Sunfeast, they have Classmate. All of these are all ITC's products only, ITC's brand only. Now imagine, sir, if ITC is having one marketing event wherein they spent, let's say, 10 crores on marketing, one particular event they conducted, in which they spoke about all the products. Now imagine, how do I allocate this 10 crores to each of these things? Do you really think it is possible for me to calculate a total this marketing event was for 10 hours, out of which we spoke 1 hour about Bingo, we spoke 2 hours about Sunfeast? Do you think it is practically possible to do that? They might conduct this kind of events, thousands of events. So the pain comes with the cost involved in ABC, but it gives you accurate cost. Okay, ABB ho gaya. Next, variance analysis, sir. So please understand, variance analysis, or you guys might have called it as standard costing in your performance management or costing paper in your college. You might have called it as standard costing, if I'm right. How many of you learned this as, let's say, if I'm talking about material price variance? How do I calculate material price variance, sir? Anybody? No one in the chat section? Standard minus actual, though we do for everything, but what is material price variance? How do I calculate that? Standard price minus actual price multiplied by which quantity? Actual quantity or standard quantity? That is the question, sir. Some says actual, some says standard. Why, sir? Because we try to learn it as a formula. But understand something, price variance, the purpose of calculating price variance is to give responsibility to purchase department. The purchase manager will be responsible for material price variance. Your factory in charge or manufacturing manager, they'll be responsible for material usage variance. So factory in charge, whoever is there, the manufacturing supervisor, he will be responsible for usage variance. Purchase department has nothing to do with standard quantity at all. Whatever factory manager told me to buy, I bought. He gave me material requisition note. He told me he needs 10 units. I purchased 10 units. I don't know how many are expected to be used. I'm not worried about it. So purchase department only buys actual quantities. So their variance should be based on actual quantity only. They have nothing to do with standard quantity. This is how you should learn variance analysis. You should know which variance is the responsibility of which manager. Then you will know, acha, this manager has nothing to do with standard. He is only buying the actual. So it's the actual quantity only we will take. And similarly, material usage variance, how do we calculate that? The actual quantity minus standard or actual, sir, I don't care. I don't mind plus and minus, okay? Actual quantity minus standard quantity or standard quantity minus actual quantity, I don't care. At the end, I know whether it is a favorable or adverse. I do not look at the plus and minus symbols to determine whether it is favorable or adverse. Anyways, so material usage is there. How much you are supposed to use minus how much you actually used. At what rate? Standard rate or actual rate? How would the factory manager know at what rate purchase department is buying it? Purchase manager can get more discount or less discount. That is his problem, not my problem. I will only consider standard price. Yeah. Whom to blame game? Yes, sir, I told you the reason behind budgeting. PRIME. R talks about responsibility. Who is responsible for this particular variance? Right? Sir, simple, understand this. If factory in charge is responsible for usage variance, and if I take actual price here, purchase manager bought it for high rate. Is it problem of factory manager? Why is his performance evaluated using somebody else's decisions? That's why we take standard price here. Kiran, does that make sense to you? You said actual, but actually we have to take standard here. Right? So variance analysis is, if you're trying to just by heart a formula, it makes absolutely no sense. End of the day, you will end up doing wrong calculations. But you really understand whose responsibility it is, then it makes more sense there. At least for your APM exam purpose, God bless you, sir. Please look at this, what is given in this part. Calculation marks will account for only the minority of marks available for a question. Even if you wrongly calculate a variance, but your explanation of that variance and your interpretation of that variance is absolutely correct. Sir, it is actually an adverse variance, sir, but I calculated favorable, sir. I wrote my entire answer as favorable only. Will I get marks? You will get all the marks except for calculation related. 2 marks may be wrong. Sir, but entire explanation I'm supposed to do for favorable, sir. I did for adverse, but it's a calculation mistake. Your concept of favorable and adverse is correct. So you will get full marks, sir. Only the calculation marks will be gone. That is why I love ACCA. You go to other courses, your basic calculation is wrong and your entire explanation is the reverse of what should be there. They completely give you 0 marks. Here you get full marks except for 1 or 2 marks for calculation. That's why I love ACCA. Anyways, coming back. So you have at APM level planning variances and operational variance. Sir, planning variance means what? The difference between the originally planned versus the revised. Original versus the revised. Why? Because you expected something, but actually the factors changed. Uncontrollable reasons changed. So you have to revise the budget. That is a problem in your planning. So that is called planning variance. Difference between original budget and revised budget. Whereas operational variance is what, sir? The difference between revised budget and actual performance. That is what you are supposed to operational. Are we good? Good. Chalo. Next one, non-budgetary methods. Sir, other than budgeting, what can we do, sir? Use of traditional budgeting, including methods like incremental, is comfortable. Many weaknesses and limitations, costly, time consuming and all that stuff, okay? Beyond budgeting. So this is basically, I don't know why, beyond budgeting is considered as a booth, as some kind of a ghost. It's basically nothing, sir. Any strategy, anything that you are doing in your business, which is useful for management, which is useful for performance evaluation, and that is not related to budgeting. If you're doing something new other than budgeting, that is called beyond budgeting. Anything that you can do other than budgeting for performance management and performance evaluation, that is called beyond budgeting. Yeah, there is no rocket science involved in this. Look at the definition, sir. Beyond budgeting is a generic term given to the body of practices that are intended to replace traditional budgeting. Sir, there is no exhaustive words or terminology here. You do anything other than budgeting to do performance evaluation, that is called as beyond budgeting only. Governance and transparency, for example, bound to a common cause by the mission and set of values rather than controlled by a central plan. So instead of creating a budget, stick to your mission statement. That's beyond budgeting. See, accountable teams. Teams empowered to make decisions and any budgets used are bottom up. I don't know. I don't even want to go into the details of these things. Simple concept for beyond budgeting is if you are doing anything for performance evaluation that is not related to budgeting, that is called beyond budgeting. What happened to what gets done gets, what gets measured gets done. See, just because you have beyond budgeting doesn't mean you should not do budgeting. No? Who says you should not measure? They are saying that you can do other than measuring. There are other things also that you can do. So simple, I'll tell you. Team building exercise is there. Does it have anything to do with budgeting? We are creating a team building activity for our employees. That is beyond budgeting. It has nothing to do with variance analysis, of budget to target to actual, nothing. So that is beyond budgeting. Okay. But is that useful for performance measurement? Absolutely, yes. Good. Advantages and disadvantages. Next, forecasting analysis is there. So forecasting mein earlier we used to teach only high-low method and learning curve model. Regression analysis and time series analysis was not covered for you guys. It was not there. They just said regression and time series, but these are not examinable for APM level. That is what used to be clear given. Now what they did, sir, they added this also in PM. Directly in PM only they added. And And unfortunately, if you see your APM syllabus, they say PM is the expected knowledge for APM. So I would recommend you learn regression and time series also, but this is not the time for me to teach regression. But yes, it would be better for you to know regression analysis. And I'm just telling it out loud. I'm just thinking out loud. At least for this September 2022, I don't think they will test regression related numerical questions, because recently only they started in PM. So they would more focus on testing this at PM level rather than APM. So the choice is left to you. High-low method mein what do we do, sir? Highest cost minus lowest cost divided by highest quantity minus lowest quantity. Do you remember those? High-low method. Cost at highest volume minus cost at lowest volume divided by highest volume minus lowest volume. This is what to do. We will get variable cost per unit by doing this. Then you substitute that in the total cost given, then you will get the fixed cost also. Correct? Then regression analysis mein what will happen? Suppose I have the sales period first year, second year, third year, fourth year, fifth year. I have the sales figures for these 5 years. By using the trend or the relationship, the system can predict what will be the sales for the 6th year. My volume and level are the same thing. Volume of activity or level of activity is the same. Okay. Similarly, time series analysis also there. Regression uses relationship, either linear regression, non-linear regression. There are so many things actually, and time series also uses regression only. So more detailed, I cannot go into the details of this because it's going to take complete 1 hour for this topic only. So I'm going to stop it at that part. And learning curve. So the more the users, the more the employees work on the same thing. If it is a repetitive nature, the more they do, the faster they become. That is what learning curve usually talks about. And A is equal to Y into X power B. B is equal to logarithm of learning rate divided by logarithm of 2. Sir, I don't think these questions will be tested at APM, because already learning curve related problems are covered in PM. They are not covered for APM, so do not worry much about it. Oh, A is equal to YX, Y is equal to AX. Okay. A is time for first unit, and X is number of units, and Y is cumulative average time per unit. Okay. So just try to pay attention to that area. Next, I don't think we'll be done in the stipulated time with the complete syllabus, but let's see, whatever we can complete, we'll complete, and then we'll plan another session if needed. I do not like compromising on the quality. Let's see. Don't jump into conclusion already. Chalo. So business structure and performance management. So this is more like regarding your structure of your business. You can have centralized and decentralized structure. So your organization is there. You have multiple divisions. So how do you divide them? So you can either break them into functional organizations, or you can break them into divisional organization. So functional means what? Divisional means what? See, simple for you to understand without taking too much time. Suppose if I have 10 products, okay, we have 10 products. If I'm doing functional, I will have departments. I will have purchase department, sales department, marketing department, accounting department, HR department. Like this, different functions of my business will be there, and each function will deal with all the 10 products. I'll have one purchase department for all the 10 products, one sales department for all the 10 products, one marketing department for all the 10 products. That is called functional division. My business is divided into separate functions. Whereas if I talk about divisional structure based on products, so I'll have 10 different products, and for each product 9, 8, something like basically I'm just doing this like this. For each product, I'll have again purchase, sales managers and all. So don't you think divisional mein there is too many people involved? There is one sales guy in product 10, one sales guy in product 9, one in product 8. Don't you think too many people are involved? Absolutely, yes. But it has its own advantage. All of them work only for one product. Therefore, yeah, even though there is duplication of work, not duplication of work, but too many allocation of resources, duplication of resources, they all specialize on a particular product or a particular division. Therefore, they get more, yeah, exactly. Katie says specialization. So that is the advantage over there. So which works for you, you can work out for your organization to decide what works for you. And functional organizations, empire building and conflicts between different functions. That is one keyword. I already told you what is empire building, right? So suppose this purchase department is there. They can spend money on different products. So how do they spend that money is a big question. There might be conflict of interest. They can buy more of product 1 and ignore the product 2. Something like that. There could be conflict between different functionalities. Decision making could be slow. It is hard to grow and diversify because you have less specialization, obviously. Those things. And then responsibility accounting, I already taught you indirectly responsibility accounting. Kaha pe sir? When we did variances, I told you na. Variances ke time pe I told you this is whose responsibility. You need to know that. So divisional manager will be responsible for controllable areas. Controllable and uncontrollable, I already told you. That is what covered in responsibility accounting. Each division will be a responsibility center, and anything that happens with that division is the responsibility of that division's manager. And these divisions are nothing but SBUs. Each division is nothing but an SBU, strategic business unit. Means you decide whatever you want for your division. We do not decide at top level. We do not decide them at corporate level. And then you have virtual and network organizations. What do you mean by virtual and network organizations? All these online businesses that are happening that are covered under network or virtual organizations. So you can see, I just need to tell you one important fact here, sir. Do you know drop shipping, ma'am? You guys know what is drop shipping? No? So simple. I register on Amazon as a seller. Okay. And what I'll do is, whenever I get an order, I go to Alibaba.com and I buy that product from Alibaba.com where it is much cheaper. Right? So I'll buy from Alibaba and I'll sell on Amazon. Simple. That is called drop shipping. But what I'll do in drop shipping is, instead of me buying and selling, when I get an order from the customer, that order will be directly going to the Alibaba seller, and I will tell the seller that do not use Alibaba labeling, use Amazon labeling for packing and all. Similarly, do not use your name on the selling invoice, issue the invoice on my business name. You can send me the invoice via email, but on the package, use my labels and my stickers. Is it making sense to you guys? Yeah, I'll be the middleman without doing anything. I'll ask my seller to use my shipping labels and my brand images and directly deliver to my customer. I'll make profit in between. All of you understood, sir, what are middlemen? I mean, what is drop shipping? How it works? Clear? Right. So, in case of drop shipping, am I actually doing anything? Am I having a company? Am I having workers? Am I having like departments, divisions and all that stuff? Nothing. This is just a virtual organization. I do not exist, only, to be very honest. There is no company involved here. Similarly, if you see, I don't know, I should not be taking this example. Maybe let me just change the example, sir. So, yeah. Last year, there is this IFRS training that I delivered to a corporate company. So I trained their employees on implementation of IFRS in their organization. What are the practical issues in that and how to resolve them, how to interpret IFRS, what is the ideology, and basically the entire IFRS related course. I delivered the entire course, but I did not invoice the company. What happened is the company has actually approached one consultancy agency And that consultancy agency has approached me. Is it because you buy in bulk? Why don't the customer directly buy from Alibaba? Sir, everybody doesn't know Alibaba, right? So many people in India doesn't even know about Alibaba. The only online sales that they know is Amazon and Flipkart. Yeah. So anyways, all online, no, it's virtual, sir. It does not necessarily be online. So as I was telling you this IFRS wala example. So in that example, what happened? There is a consultancy agency in between. They got on contract from corporate and they gave that contract to me, a provider, service provider. So what are they doing in between? So they're nothing but the middlemen making profit by doing nothing. Right? So that is called network or virtual organizations. And then you have complex businesses like joint ventures and all that stuff. So joint venture, what will happen? There will be different venture capitalists. We can call them as joint venture capitalists. So they put in all their money and they put in different expertise. All of them come together and they'll do a combined business. At the end of the business, once that activity is completed, they'll get a profit, they'll share that profit and they'll walk off, right? So issues, there could be issues in planning that, there could be issues in performance measurement, there could be issues in controls or vice versa. Because when there are multiple people who are all investing capital and who are all bringing something to the business, everybody's expectations could be different and they might come with a different set of ideology. And that ideas could be different for different people. So because of that, what will happen is there will be difference of opinion and then these things will get a little difficult. Then you can also form strategic alliances. Okay. Alliances, I'll have to give you one nice example, sir. You guys know Starbucks and Barnes and Noble. I'm assuming you guys know Starbucks for sure. But Barnes and Noble, I don't think you guys, much of you know about it. Tata Alliance in India, yes, with Starbucks. Agree, sir. Agree. Starbucks ke saath, now you guys are moving on to the new one, that is Tata. Very good. But Starbucks and Barnes and Noble had an older alliance. Now it is with Tata. Agree. See, Barnes and Nobles is more like a library, not library, bookstore. Yeah, that would be a better word. So Barnes and Noble is a bookstore. So what they did, sir, they had an agreement directly with Starbucks. So at each bookstore, Barnes and Noble bookstore, you will find one Starbucks point, you can say, or a vending, or you understand the picture, right? Stall. That would be a better word, I guess. So at every Barnes and Noble bookstore, you will find one Starbucks type stall. So that's a tie-up between these two companies. That's a strategic alliance. So there is no direct venture. They are not doing any business together. They are just coming with an idea that people would love to have a coffee in their hand when they are reading their book. They just came up with that nice idea. That's all. And both of them get their own profits. There is nothing coming here. It's just an alliance. There could be sharing of profits because people prefer coffee with book. Exactly what I just said. You are typing it and I said it simultaneously. Chalo. Then complex supply chains. Sir, you guys know supply chain, right? Everything from the start of that like procurement of material till after sale services to the customer. Everything is included in supply chain. So sometimes what is happening is the supply chains are becoming more and more complex these days. Most of the things are getting eliminated. Like I told you in case of Alibaba wala example. So the things need coffee now. Sir, imagine if you need a coffee for listening for this much time, what do I need for talking for this much time? So the supply chains are becoming more and more complicated because people need faster deliveries. You know, we used to, I still remember, we used to order something on Amazon. It used to take 3 days or 4 days for delivery minimum. If it comes in 3-4 days, we used to be jumping with joy. It used to take minimum 1 week, 10 days and all. Now though it came down to 2 days. Now Amazon Prime shipping, 1 day delivery. You order today, tomorrow you get. And then now Flipkart is coming with super quick delivery, it seems. Within 2 hours delivery. And as if that is not sufficient, Zepto came in 10 minutes delivery. I don't know. The things are getting more and more complex and more faster, and things are changing a lot these days, to be very honest. Blinkit 8 minutes, sir, let it be. So after some days, you think in your head what you want and they'll bring it to you directly. You do not even need to place an order after some years. Chalo. Then coming to the service sector, there is a small change with service sector. Basically, the characteristics of service sector would be slightly different from your traditional goods based. What are those? The characteristics are, first of all, intangibility. Obviously, services are intangible. You cannot touch, feel, see them. Heterogeneity. They are all not similar, sir. Obviously, they're not homogeneous in nature. Products. If I buy this smartphone, this product will be the same no matter where I buy this from. This model will have the same features and same functionalities. You may say, sir, what if it is an AT&T variant to Verizon variant? Let's not go into that. The mobile will remain the same, right? As long as it's the same variant at least. But whereas services, sir, if I teach APM for the next batch, if I do another 3 hours session for APM, do you think I'll teach the same manner with the same examples? Maybe I can complete the entire syllabus in 3 hours next time at least. Anything can happen. So services are usually heterogeneous. It will change. Similarly, simultaneously, sir, I am delivering it and you are consuming it. This is an older definition. Now things can be changed here. I believe simultaneity is removed now. Perishability is also removed because we are able to store most of the services these days. Yeah, recording ho raha hai na abhi. I'm teaching and you are listening, sir. Go back to the olden days. If some student misses a class, he missed the class. As simple as that. Now the recordings and all softwares have came into the picture. But yeah, simultaneously means when we provide the consume, it becomes a product, doesn't it? Yes, agree. I agree, sir. When you record the lectures, it would become a product and it's not service anymore. I completely agree with that. And perishability means what, sir? Services usually cannot be stored. They have to be used, consumed and gone. But nowadays, again, this is also not true because my services are not perishable. I am recording this so these can remain for more longer period of time. No transfer of ownership. So just because I taught you doesn't mean the ownership transferred, the knowledge transferred from me to you. I'm sharing it. I'm not transferring it. I still have that ownership. I still have that concept. I shared it with you. Agree? Then business integrations means having more integrated businesses. Copyright. Acha. Sir, I believe, I wish my materials will get a copyright symbol one day. But right now, though, I do not have that much time to write a material which I can copyright. Videos and all you cannot copyright, sir. There's no such concept as such. Maybe the recorded material, recorded lectures and all you can copyright. Yeah. Again, let's not go into the details of that, but yes, copyrights, yeah. Sure. So integrated business integration means what, sir? Where each process of your business integrates with each other, communicates with each other, collaborates with each other, and all of them work together as one single business. Sir, my sales, purchases, marketing, after sales services, my HR, my technology, my infrastructure, all these things, if they are working as one single organization, well integrated with each other, that is where I can give maximum output to my users, right? So for that, Porter says there is a value chain. There is a chain of activities that add value to your customers, and that chain starts with the procurement of raw material, basically here. Procurement of the material. From there, inbound logistics. Inbound logistics means inward transportation, bringing the goods from the supplier to my warehouse. Operations, manufacturing process. Outbound logistics, delivering it to the customer. Marketing and sales and services. Now you might be thinking, sir, why is procurement not included in this? Now, procurement directly does not add any value to the consumer. It is a support activity. To deliver value to the consumer, we need these things. So what are the things that we need, sir? Firm needs infrastructure, all the equipment and all that stuff. They need human resource management, HR managers. They need technology, they need procurement, but these directly do not add value to the consumer. These things add value to the consumer. Sir, you might say, sir, how is inbound logistics adding value to the consumer? Obviously, yes. See, if there is a delay in inbound logistics, then automatically the entire chain will be delayed. That means end user will not get the value that they wanted. So all of this together only will add value to the end user. So the primary activities is inbound logistics, then operations, outbound logistics, marketing, after sales service. The support functionalities for this is procurement, HR, IT, and infrastructure. So these all together will form the value chain of the company that adds value to the end user. This is what Porter's value chain is. Then McKinsey's 7S model talks about an organization consisting of the 7S. What are those 7S, sir? You have structure, your organizational structure, the systems that you are using, the strategies that you are using, the skills that your employees possess, the style of your organizational style of management, and the staff of your company. All of this should again share a common goals and common values. When these all 7 work together, then an organization has been formed. The 4 hard elements are basically your strategy, structure, systems, and shared values. Sorry, hard elements, strategy, structure, and system. Soft elements are this: shared values, skills, staff, style. These are more like intangible. These are more tangible things. So again, that's the basic discussion. Now comes my important discussion. So do we need to come with some sort of KPIs for each of these elements in the exam? No. KPI you will get either in Porter's 5 forces or balanced scorecard. Yes, you will need. And building block though includes KPIs, so you will not be worried about building block. Balanced scorecard, you will need KPIs. Then financial and non-financial performance measures are there. There you will need KPIs mostly. Performance pyramid, though they will not test much, but if tested, then yeah. But the good thing with ACCA is they'll give the performance pyramid in the exam. Sir. If they test a question on performance pyramid, they'll give the pyramid in the question itself. You do not need to by heart that. I do not remember all that performance pyramid related items. Anyways, moving further. Business process reengineering. In one single sentence, if I have to say what is BPR, my answer would be BPR talks about the fundamental radical redesigning of the fundamental thinking process of the company. So this is what we mean by communication and professional acumen. BPR means students can say BPR is basically changing the way things happen in the business. Yes, possible. That's the right answer. But professional marks will be given for a student who says BPR is radical redesigning of the fundamental thinking process of the company. So you understand the difference between these two and then you learn your subject. What are the top 5 topics for the exam? Do not ask that question. You are asking the wrong person, sir. Question is right, but you are asking the wrong person. I never know what are the top 5 questions or top 10 questions. I can only tell you what are nice concepts and what are not really nice concepts. So I do not want to disappoint you. Balanced scorecard is very crucial for your examination. So make sure balanced scorecard, building block model, and then CSF's KPIs and this thing, that entire first chapter related. Then yeah, those would be the most crucial and important elements. The rest would be more generic in nature. You know, the rest of the syllabus altogether. Your strategies would be another interesting topic, but less tested in the exam. I don't know why. I don't know. APM paper, they do not really test these strategical portions like TQM, JIT, Six Sigma. Those things also, I believe they should be more tested, but they're not really focusing too much on those areas. Examiners, EVA be getting on my nerves. Okay. Yes. But then I believe EVA related, those adjustments are getting on your nerves, right? Do not worry, sir. The types of adjustments that you have in your APM are 10 or 11, maybe hardly. Actually, there are 150 to 200 adjustments in EVA calculations. Only 10 are given for you in APM syllabus. And those 10 may say they hardly test to 2 or 3. So do not complain, sir. You are in no position to complain about 10 given out of 150. You should not complain about that anymore. They don't test it at all. Possible, sir. But at least just try to know the meaning of it. At least just the meaning of it. So you can do something in the exam when it comes. Anyway, sir, let's go continue, sir. Half an hour rest, half an hour pending. Chalo. So business process reengineering is what? Fundamental redesigning. The way the business thinks, the ideology of the business should change. It is major changes in the business activities is called as BPR, sir. complete redesigning of the business process, maybe shifting completely from offline to online, or changing their marketing strategy altogether, or firing like all the employees or majority of the employees and outsourcing certain activities of our business, creating new training opportunities for the employees. All of these things are what? These are all activities as a part of BPR. So when do we do this, sir? We do this only when business really needs a major change, major overhaul, I can say. Like things are not at all going right, so we need to do major changes. That is when we go with BPR. Otherwise, it's very costly and it can change the fate of your company. Firing the employees without a proper cost can become a dangerous thing for the company, sir. So that is another thing. Next, information systems and development. Transfer pricing, it's actually the easiest chapter, to be very honest, if you really understand it. Okay, let's quickly do this theoretical topic, sir. Then I'll go to transfer pricing and I'll spend some more time. Would it be okay for you guys to extend the session today itself? Tomorrow I have another program. Actually, the chart for transfer pricing really helped. Yes, Vivek, let's do one thing. The chart of transfer pricing you can share in the chat so that Rosalind can also download that and have use that. She'll also be benefited by that. 7 p.m. yeah, I'll try. Let's see, let's continue, sir. If the pace of the lecture is good and if you guys are also able to sit through it, then yes, we'll continue it. Chill. Information systems and development in technology. So this is something that is trending these days, so let's quickly go through that. So any information that management needs should be accurate in real terms and also accurate in terms of shortcut. So accurate usually means accurate, A for accurate, C for complete information. Do not give half-cooked bits and pieces, give complete information to the management. Cost should be less than the benefit, means the amount I spend should be approx how much more time, please. I'm not sure. Let's do one thing. The scheduled time is till 6. So we will see where we stand at 6 p.m. That is after half an hour. Let's see where we are standing exactly. Then if it needs more time, if we are halfway through, then let's conduct another session. If we are almost all there, let's extend it and then finish it off. We'll see in the next half an hour exactly where we stand. I would be staying it until 12 minutes. You would be staying, sir, but imagine my pain. Not pain, I'm having fun. I'm so sorry, Vidhi. The problem is this is the first time we are doing APM revision session. I did it once earlier, but it was more like, taking the chapter name and talking about each element. We did not spend this much time on each element actually. It was face to face, and I'm like, do you know balanced scorecard? Students were like, yes, sir, we know the 4 elements of balanced scorecard. So we used to go to the next topic. So because of that, it was done in a couple of hours, but this time I'm explaining the topic, so it's taking a little bit more time. And I cannot predict also. I thought I'll just keep it short, but then once I start explaining, I get into the flow of it, and then I tend to do this a lot. I need to learn from that. I need to cut the conversation a little less. But anyways, coming back. So accurate, it should be complete, cost should be less than the benefit, understandable, relevant, adaptable or accessible, timely and easy to use. Adaptable means it should be practically possible to use that information. Accessible, it talks about that. I got some data, I got some information, but if I cannot use it for analysis, it doesn't matter at all. It's useless for me. And that information should be timely. I do not want 10 years old data. It should be easy to use. I should not spend too much time and resources on that again for using that. So you have qualitative information, quantitative information, financial, non-financial data. Sources could be from internal sources, external sources. It could be off the internet, but also be very sure about the authenticity of the information that we are getting for analysis. If garbage in, garbage out is something that I tell my students all the time. I learned something when I was in 7th standard, sir, when my computer teacher actually told me this. Computers and all systems usually follow garbage in, garbage out. If you give useless data to a computer, it will give you useless report only. If you give meaningful data to a computer, it will give you meaningful reports. If you give garbage, it will give garbage. So systems are only as reliable as the data that you feed into the system. Now, MIS means what, sir? Management Information System. Any system that provides management with information is an MIS. It could be Excel reports. It could be Word documents. It could be a software. It could be your ERP system. It could be a database management, DBMS. It could be an SQL, whatever it is. Any system that provides information to the management is an MIS. Simple. So there are different types of MIS. First one is EIS. It is used by the top level executives, sir. The strategic level people, whatever softwares they use are called as EIS basically. Then you have decision support system. So what is decision support system? It helps you in taking decisions. Sir, how does it help me in taking decisions, sir? It does I don't know why it is doing that. Okay. Decision support system, what it will do is basically, it can give you scenario analysis. Like if this happens, these are the possible things. If this happens, these are the possible things. So in this, with this, you decide which is the best one. So it predicts the consequences of number of possible scenarios, different scenarios, simulations, yes. And then you have transaction processing system, records all the transactions. This is basically like your accounting software. TPS is more like your accounting software. And then you have expert system. You know, expert systems are basically where knowledge bases, these are more like knowledge databases. Different experts come together and build a database of FAQs, frequently asked questions or something like that. For example, if I go to ClearTax website, best example for expert system would be ClearTax. So you can go to that website, cleartax.com, and you just type in the name. Let's say you type in salary, income tax on salary. They'll give you complete information about what is basic salary, what is HRA, what are the deductions that you can claim, what are allowances, what are taxable allowances, deductible allowances, everything they'll clearly give over there. So they hired certain experts and build a database of knowledge that is called expert system. Okay. So a qualitative MIS system should deal with good information, obviously, garbage in, garbage out otherwise, and there should be lean. Lean means what, sir? It should be having right thing at the right place at the right time without any wastage of resources. So if I click on profit and loss, I only need profit and loss. It should not look for other transactions and all that nonsense. It should only look at the revenues and expenses, and it should give me the profit and loss. It should not look at assets, liabilities, and equities. So it should not waste any resources. It should be right place, right time, right thing. So the 5S, what are 5S, sir? Structurize it properly, systemize it, sanitize it, standardize, and self-discipline. So these things keep changing. Let's not worry about it. Your information system should follow these 5 qualities or elements. Then proper integrated reports should be there. Okay, now nice one, sir. Data silos. This is newly added in your syllabus. So I'm going to take a couple of minutes and then I'm going to explain this in little bit detail. So that is a new portion of your syllabus. Pay attention. If you have read from older textbooks, this is not there earlier. So data silos means what, sir? Same information is actually captured in different parts of your organization. It is a duplication of data. So it consumes more of your important server storage, and then it also creates problem when you are trying to summarize the things into one place. So suppose imagine this, if you're in your college, if you do not have student number, an ID number or a roll number or anything like that, there is no unique number associated with you. Imagine the problem that the college may have. Your fee receipts are somewhere else. Your scholarships are stored somewhere. Your exam marks are stored somewhere. Your pending dues are stored. Your attendance is stored somewhere. These are data silos. Each part is called as a data silo. But because of having one student number, all of these are integrated with each other and one common database is built. I hope this example made it very clear for you. Yes? Okay. So when your organization is growing, how is this useful in any terms? See, they just are trying to, ACCA is figuring things out in certain areas, to be very honest. This has nothing to do with performance management, but they believe that information systems are something that all the students should know, because right now, every job that you are doing is basically related with the technology. So we should equip our students with the technological advanced knowledge. So they are putting it things here. But is it related to performance management or performance measurement? I do not think much. Maybe the performance of your information systems may depend on data silos that are there. So suppose you are trying to analyze something, business analytics or data analytics you are doing. Let me just quickly share one small file here. Let me find that out. Did I just delete that? No, I have the PBX file. I'll just share the JPEG. Okay. Why can't I? Oh, like this. Okay. I thought of dragging and dropping it. Why is the screen sharing is paused? Okay. Can you guys once see in the chat section? There is one bank dashboard that is shared. I'm sharing the screen, but only that PDF. So let me just share the screen. Okay. I believe you guys can see it on the screen, right? Can you guys once confirm on the chat section? Can you guys see it on the screen? The dashboard. Yes? Okay, thank you. I also shared this file with you guys. Sir, imagine this. What is this dashboard? This is a bank's database actually, taken with some random data actually. So this is a perfect example of business analytics. This is a perfect example of data analytics. You know, if you see the raw data, it is basically a huge data of customers, their ages, their number of customers, new customers, that the date of joining the bank, when they opened their account, with their gender, male, female, their region, all this stuff is in an Excel spreadsheet. So what we did, we, as in using Power BI, this is a Power BI dashboard actually. I took a snip of that and I shared it with you guys. So these are meaningful analysis. So it is showing me how many total customers are there. What is the total balance in the bank with for all these customers together? How much are they saving in us? Who is the top customer with the highest bank balance? How many new customers are joining our bank every month? By their balances, how many of them are having more than 300K balance? How many of them are having more than 50K balance? How many of them 150? So balance-wise distribution, age-wise distribution. Then based on their job, whether they are in a white collar job, blue collar job or others, male or female, based on their location, I can literally see everything on this one screen. Sir, actually this is a JPEG file. This is just an image file. If I see the original dashboard file, I uninstalled Power BI on my laptop recently. I formatted it. So these are all interactive. I can click on female and all the dashboard filters will automatically show only female data. Or I can click say July here. All the data will only show July related filtered. So like this. So this works only when there are no data silos, when all of them are integrated with each other. Sir, don't you think that dashboard will help me in performance management and performance measurement? What do you say, Vivek? Do you think that will help me in performance measurement, the dashboard? Yes? Okay. Sir, but then that is possible only when data silos are not there. So in another sense, in an indirect sense, yes, this data silos is also related to business performance evaluation. Right. Moving further, let's not spend too much time on that. So what are the needs for changing in an organization, sir? Business structure might change. Business may grow. You want to diversify into new business. Yes, good, Kiran. If you have worked on Power BI, it's good. Actually, I'm planning to introduce a Power BI course for free for all my students of ACCA, so that they'll have practical knowledge on happening technologies as well. It's a bad thing is what they are trying to say. Yes, silos is obviously bad. If you are having data silos, if your things are stored in different locations in bits and pieces, and if they are not all integrated, then how can you take decisions? Your information is poor. Right? Okay. Chalo. So why do businesses change, sir? Because there could be a change in business structure. We want to grow and diversify. Competition is increasing. New accounting developments are coming in. So we had to change certain information systems. Like for example, India has shifted from old accounting standards to new Indian accounting standards. So there are new things like other comprehensive income that are being introduced. Financial instruments are getting introduced. New changes are there. So obviously my accounting system also needs to change. Information system should be changed. New technologies are coming. People are changing, expectations of stakeholders and shareholders are changing. Yes, digital payments things are there. So many things are changing in the market. So obviously software systems also should change, right? So whenever you are talking about technology development, you need to keep in mind the cost associated with that. Is it flexible? Is it scalable? What are the costs? I mean, benefits pay, it should have flexibility, it should have scalability. Scalability means even if I add more things, it should be able to handle that. Improved security, flexible working, environmental impact should be low, all that nonsense they're just telling you. These are all very common things, so I'm going to skip that. Data warehouse means a place where we store all our data, a huge data, a database. ERP system means one system, it's like Lord of the Rings, one ring to control all the other rings. ERP is basically where one system will be having all the features that you need, all the options that you need for accounting, sir. Simply, if I tell you in a simple example, we have 4 M's in business. What are the 4 M's of business? Money, manpower, machineries, and material. These are the 4 M's that we need in business, major 4 M's. So if a system is there which can handle all the 4 M's, means capital related, everything should be there. Manpower, HR related should be there. Machinery, fixed assets, modules should be there. Depreciation calculations, impairments, all that nonsense. Material related, you should have inventory planning. You should have reorder levels. You should have buffer quantities and buffer periods, everything. So an ERP system basically combines all different modules into one, and it's one place where you can get all the data. Okay. Then you have knowledge management systems. So right now we are also using LMS, learning management systems and all. Knowledge management system means your organization will have a website or something like that where all the knowledge is stored and you can learn. See, for example, the company that I work with, so we have a database. We are creating a database where it's a software company. So if a fresher is joining our company, we created a database of videos where if a fresher thinks that if they get stuck at some point and if no seniors are available at that time to help them out, they can just go to that source. Basically, we have a private server. So they go to that folder and they can search for that particular file and they can access that video. So it's kind of a knowledge management system or a learning management system. Every company will also have a customer relationship, CRMS. So CRMS is mandatory for every organization, right? You should know their customer. You know, you get happy birthday messages from companies, banks, credit card departments. Everybody sends you happy birthday message. And you also feel a sense of happiness when you get those messages, don't you? Like, my banker is actually wishing me on my birthday. It's just a customer relationship. It's trying to build a loyalty for a customer. Similarly, you get balance inquiries, you get credit dues, etc., etc. All of this is a part of CRM only. Creating a relationship and maintaining a relationship with your customer. Then RFIDs, you guys know what are RFIDs, I believe. You know, when you leave in a shopping mall without billing, I mean, at that billing counter, they'll remove one small tag from the clothes and other things, right? Small tag will be there. If they do not remove that tag, that thing will be there at the exit. It will give red alert, key. FASTag is also RFID only. Yes, FASTag is also RFID only. So basically, it's a radio frequency device. So there will be a small frequency set in that tag. So when that come into contact with that reader, automatically there will be a data package or a alert or a notification or something like that. Nowadays, even livestock are also having this FASTags. Like buffaloes in India, their ears are pierced with a GPS related FASTag. RFID. So they can track the location, and if they go beyond this much radius, automatically an alert will be sent to the users, like that. Then you have process automations, like RPA to Prem sir has an expertise in this area, but I'll just tell you a simple idea of how process automation works. So for example, the moment I get a mail from, let's say, my banker, sir, my credit card statement is there. They send me an email stating that this month you have this much due and you have to pay by this date. Suppose I create a software which accesses my mailbox, looks for that particular address. The moment I get a mail from that particular email ID, it looks if that is actually a due mail or not. If it is a due mail, it will fetch that value and it will fetch the due date, and it will give me a notification on my phone. Or else, going a step further, it logs into my net banking and automatically settles that due also. I do not need to do anything. It's just a software that is doing all this stuff for me. Scary, but it's possible. Let me tell you, sir, this is actually possible even today. There is a software called UiPath. Okay, you have a software called UiPath, and it can actually do all that stuff that I just told you. Except for OTP, everything else it can handle. And let alone that, sir, actually Microsoft is releasing something called Power Automate. You can do that with Power Automate as well. Okay, there's so many technological stuff happening across the globe, sir. You should just know these things. Chalo, next one, Internet of Things. Internet of Things, so I don't even want to talk about these things, sir. You are Alexa, you are, I'm not going to say Google, the keyword before Google, because this thing will ting, it will start firing up. So, you know, Alexa, Siri, that Google thing, all of these things work on the basis of Internet of Things only. You know, turn on the light, turn off the light, turn on my geyser, all that stuff is Internet of Things. Artificial intelligence, so you guys use Instagram and all. So when you scroll through your Instagram feed, you get only the videos that you earlier liked or similar videos. How does Instagram know that, sir? Artificial intelligence. It is comprising of machine learning and algorithms. So if you watch more and more academic videos, you get more and more of that same similar videos on your feed. So how does system know that? It's artificial intelligence and machine learning. Similarly, big data. Sir, machine learning, a simple example I'll tell you. You guys will be surprised to know that example. You'll be like, I have been seeing this in my life. I have been using this without actually knowing that it is machine learning. It will be a genuine surprise to you. We all use chatting, right? We all do chatting. We all use keyboards for typing. In our smart keyboards, in our smartphones, when we type some word, based on our previous texting pattern, it will actually tell you what is the next word. Do you guys use this? Prediction, keyboard predictions will be there. If you type, let's say something like good morning, automatically the next part it will automatically fill. Even in Gmail also, they started using this machine learning in Gmail also. I don't know. My keyboard knows me better than anyone. Exactly, sir. Autocorrect. Yeah, not autocorrect, but predictions. What would be the next word? Your keyboard predicts that for you. And for me to even emoji that I use also, it will show. If I put an exclamation and then a space, automatically my keyboard will say that your next emoji is something like this. One eye up, one eye down, that emoji. If I use a dot and space, it will show me that smiling with tears in eyes wala emoji. My keyboard knows me. I think everybody should have a partner who is like a keyboard. They should know us. They should know us better than anyone else, I believe. Chalo. Anyways, moving further. So that is machine learning, by the way. Next, you have big data. So big data means nothing but huge collections of data. As simple as that. Extremely large collections of data. Big data has the following characteristics. What are those, sir? Variety. You should have huge variety of data. Like collect as much data as possible. At a point, there was a point where people thought, why is Domino's and McD asking me my date of birth to give me my pizza? But then Domino's and McD send you a coupon on each of your birthday. So they collected variety of data without knowing when and how it will become useful for them. And now it is becoming useful for them. Similarly, volume, you should have crores and crores and crores of data points. Velocity, you should update those much faster than anything else. Veracity, sir, proper accurate data to hona hai. Just because you have too much data doesn't mean it's useful. It has to be accurate data, trueness of that, and it should have value, sir. Whatever data you are having, it should be valuable for you. You should have use to that, utility to that. Just because you collected correct data of 10,000 students without doing nothing, It's not big data anymore. It's useless piece of crap. So have a value for that. So big data analytics, sir, I have already shown you the dashboard. That is also big data analysis only. Data visualization, I have shown you that. How do you prepare those charts and graphs and all that stuff? That is called data visualization. There are different methods. So this is again new added topic. So pay attention. Possibility of getting tested in the exam this time. Data analytics methods. The methods that we can use for data analysis. One is descriptive. Descriptive means what exactly happened as a paragraph. Diagnostic means why did it happen? What are the causes or what are the reasons for happening of a past event? Suppose I made a profit of $10,000 more than what I make usually every month. So why did you make that extra $10,000? That is diagnostic. Why did it happen? Then predictive, what will happen in the future? Prescriptive, what kind of action should you take in the future? So suppose I'm predicting we are going to get a loss in the next quarter. So what is the prescriptive for that? What are you going to do about it? So your data analysis talks about this 4: descriptive, diagnostic, predictive, and prescriptive. All these 4 should be included in that. So descriptive is easier. What happened, you just write it as a paragraph. Diagnostic, knowing the reasons why it happened is a little difficult. Predicting the future is more difficult. And also finding what to do is even more difficult. So as we move from left to right, the complexity increases, right? So there are so many tools that we use for data analysis. Linear regression is one of those tools. Regression analysis, we already just spoke a little bit about it, right? Then you have a decision tree. Decision tree, I believe you have done problems on that also. Like at this point, you'll have 2 different points. From this point again, you'll break it into this like this. Have you done this kind of things? This kind of problems? You'll calculate estimated value or expected value for each node. They'll give you probability and then you'll bring it down. Yes. Okay. That is called as a decision tree. Agree. Then sensitivity analysis you have done in FM and AFM, I believe. If you have not done AFM, no problem, sir. Sensitivity analysis you have done in FM, financial management. How much? If the investment increases by 10%, is the project still viable or not? How much percentage change is expected before it becomes useless or before your decision changes? What is the percentage of change required? That is done in sensitivity analysis. If my cost increased by 2%, is the project still viable or not? Those kind of calculations. Okay, then different analysis are there. Text analysis. Let me tell you, sir, you guys also do this. Text analysis means what? You analyze the text and then you get valuable insights. You open your keyboard. If you guys are using Swift keyboard, I don't know, I don't think most of you use that, but Microsoft Swift keyboard is there. If I go to that, it actually tells me which word I have typed the most, how many times I have typed, how many letters I have clicked, everything it will show me as a statistics. That is text analysis. Even your Google Lens. Apple also introduced that in with Siri actually for all their iPhones and iPads, wherein you select a picture, long press on a particular word, from that picture, it can extract that word. Have you guys used such features? Google Lens, though, you can do that now. You get someone gives you a piece of paper, something is written on that, you want to send it as a message. You just open Google Lens app and scan it, you can extract the text and you can copy paste it. So that is text analytics and image analytics. Video analytics you will see on YouTube and all, easy to understand. How many views are there, how many male, how many female, which part of the globe they are watching the video from, how many of them are subscribed to your channel, how many are not subscribed to that channel, what is the duration of the video, till what time how many people are looking at, what is the average watch duration of your video, all that nonsense. Video analytics. Voice analytics also the same thing, like your Google, Siri, all that things do now, Alexa and all those things. That is voice analytics. Then sentiment analysis, also understanding the emotion involved. You know, you go to Alexa and say something bad, it will not respond to you much. But at the same time, if you say something happy like, hey Alexa, so thank you for making my life beautiful, it will give you a joyous reply. So those are sentiment analysis, just trying to understand the mood, and you learned it the hard way. What do you mean by that? Chalo, anyways, we'll talk about it later. Ping me that. Next, you have GDPR. Sir. GDPR is very important. I'll tell you, all of you already know what is GDPR. General Data Protection Regulation. Whenever you open some websites on the internet, it will show you one cookies related one policy, privacy policy, and you, without even reading anything, accept cookies and proceed. All of us do that. Whenever we open some website, it will show na accept cookies or reject cookies, something like that. If you reject the cookies, the page will close. You will not be able to access the page only. Are you guys with me or did I lose you guys? Yes? Okay. So that is nothing but GDPR only. It's a data protection. User should know what their data you are collecting and what you are doing with that data. That is called GDPR. Accept the essentials. Good. That is important to do. Nice to do. Corporate digital responsibility. So just like you have corporate social responsibility, you also have a digital responsibility to keep the data of your customers and your clients safe. Just because you have the data of them doesn't mean you can just go ahead and share it with everybody like pamphlets. No, you have to keep it safe. So there are data managers who manage, collect, use, and all that stuff. Data scientists, these are the people who try to understand the linkages between different data points and then make meaningful interpretations of that. And data champions are basically these data analysts who can cascade this influence from board level throughout the organization. These people like bridge the gap between the top level and the organization, and they we can say communicate the data properly to everybody else. Then you have finance business partners, all your business managers, IT professionals, data experts, all of these people will partner together to make meaningful usage of data that we have with our company. So right now we are looking at a case where IRCTC is trying to sell their user database. IRCTC is trying to sell their user database. India is in trouble. Trust me. So huge customer base IRCTC has. And if they are selling it, God bless India. Okay, so that brings us to the end of that. Chalo, let me just scroll back to the index. We are at the end of the scheduled time. It's 6 p.m. right now. So you have total 12 chapters and we have completed 5 in this. So we are not even halfway through, I believe. And 6th chapter actually takes 2-3 minutes to cover. So I'll just cover that also. We'll be halfway through exactly in the given 3 hours. I thought we'll complete full syllabus in 3 hours. I actually made the poster also. I told my team, full banana, full banana, full banana. We'll finish full syllabus in 3 hours. Okay. Just to be sure, is it worth it or am I taking too much of your time? Be honest, sir. Be honest. Do you think I can make it much faster? Okay. Very proper. Okay, good. Thank you, sir. See, I don't think I'll make any other revision video after this for APM paper at least, because we are going at such good pace and coverage. We are balancing it very nicely. So I think this will be useful for at least another 6 or 8 batches, I believe. Start this pocket notes on my own, but it is saving my time now. Yeah. Reality check on the weak areas. Nice, nice, nice. Good. Chill. So let's finish this one small topic, sir, performance reports, and then we will wind up for the day. Next half, we'll schedule another session. Probably tomorrow evening, I have a small puja at my sister's place. So I'll have to check and I'll confirm you guys. Let's not do it on record. We'll talk about it. Okay. So performance reports for management. So your question number 1. Question number 1 actually is a report to the manager, right? That is what your question is, your first question of your syllabus, 50 mark of your paper, 50-mark question. So in this topic, chapter number 6, we do not talk about the reports much. We just talk about what are the problems we face, what should be considered, what are the qualities of a good report, basically what you should do to get more marks in the 50-mark question. So I'm going to wind up today's video with the most important topic, which is how to score maximum marks in your first section A 50-mark question. So pay attention, then we'll close this video. What are that, sir? What is the consideration that you should have when you are designing a performance report? The consideration is basically, understand something, the report should be complete in all senses. That's the most important one. It should be complete. It should be comprehensive. Sir, how do I do that? First, understand the purpose of the report. See, sometimes they'll ask you, write a report to the board of directors. Sometimes they'll ask you, write a report to the managing director or directly to the chairman. So understand, if you're writing to board of directors, you can take a liberty and you can explain in detail a little bit. But when you are writing that report to to the chairman, you need to be very clear. Chairmen do not have all the day to read your entire report. They need concise reports. So you need to know your audience clearly when you are reporting it. Why am I creating this report? Why am I preparing this report? What is the objective of preparing this report? To whom am I preparing this report? If it is for shareholders, I need to be as descriptive as possible. I need to give them as much information and explanation. But if it is to managing directors or chairmen or CEO, I have to keep it short and crisp. And information should match the purpose. I should not give irrelevant data. I should not give useless data. It should be relevant, and it should have both financial, non-financial, quantitative and qualitative data. And the layout also should be suitable, sir. Suppose the dashboard that I have shown you earlier. See how neatly it is prepared. I prepared that myself when I was teaching Power BI to a couple of my students. So live tha uske samne maine prepared, in their presence I prepared that dashboard. So the layout should be suitable for that particular purpose of the report. Are these performance reports or the advice report, the ones we made? Performance report and advice report, what difference does it make? Ma, you advise on the performance of the company only, na? In APM, your first question is write a report giving your advice on the performance of the company. So you call it advice reports or performance reports. According to me, it's the same. In advice report, we challenge the performance report. Usually don't. Oh, you came like that. No. See, there is a difference between evaluating the performance of a company and evaluating the reporting of the company, performance reporting of the company. Right? So sometimes they'll ask you to just write a report on the performance of the company. Sometimes they'll tell you already this is the report that is prepared. You make your comments on the report. So that is evaluation and that is more like reporting on the report. It's not reporting on the performance. So that is what we meant. The first thing is you should know the purpose of preparing that report. What is expected in that? What is the content? What is the information that is supposed to be there on that report? Right? So this is useful for any report. Basically, it's advice report, or in your language, it's advice report. But yeah, whether it is report on performance or report on report, it's the same thing. So in techniques, we use data visualization. So too much data visualization is dumb. I don't know why some people do this. Like just put everything that is possible on this. Like there will be one pie chart, there will be one table diagram, there will be one line chart, there will be one filters, there will be one slicer. Put everything possible on the chart because you wanted to prove a point that you know all those stuff. Don't do that. Keep the visualizations useful and interactive. So when we are dealing with quantitative data, what are the problems? Quantitative means measurable data. So what are the problems? First one is selective usage of figures. Many students also do this in the exam. So do not make this mistake, sir. What is that? The mistake of paying attention to only few figures and ignoring other values. Few values you pay attention. ROC is very important, sir. But asset turnover ratio, right? Like this. Never do that mistake. Never do that mistake, sir. Do not do selective usage of figures. What is favorable, we will take those numbers and we will report on that, and unfavorable numbers we will skip. Do not do that. People do that. Confusing correlation and causality. Like what causes what? What is the cause and effect? Suppose if my cost of goods sold is increasing, then my gross profit would decrease. Why is my cost of goods sold increasing? What is the reason for that? So we need to understand the cause and effect relationship, not just comment out that the cost of goods sold percentage has increased for this company. It shows operational inefficiencies. Who told you? Who told you that it is operational inefficiency? Maybe cost of goods sold has increased because of global reasons. So right now, let's say Russia and Ukraine are fighting with each other. Russia has blocked their oil reserves. Russia has the world's second largest oil reserve with them. They said we will not export to any country. They block the oil. Because of that, what happens? Sir, oil prices have increased everywhere across the globe. India also, what happened? It's the same thing. 1 liter of cooking oil, it went from 150 rupees to 120 rupees to 250 rupees. You cannot say that increase of prices because of operational inefficiencies of ITC or operational inefficiencies of Tata or something like that. It's a global. So you need to know cause and effect relationship. Don't just give your interpretation on the numbers. This is what you did in FR also. You also did that in FR. GP margin has reduced, so company's performance is bad. No, you need to know cause and effect relationship. Failing to look underlying causes. That is what I just said. Looking at figures in isolation. Sir, one number is always linked with some other number. You may or may not know it. You can see a company's turnover has increased radically. Like for example, from turnover of 1 million, the sales has grown to 10 million suddenly. You'll be like, company is growing 10x, it is amazing. No, wait. Go to share capital in the balance sheet. Go to equities in the balance sheet, go to liabilities in the balance sheet and see is either the share capital or the liabilities is increasing or not. If they are increasing, it actually means you have invested further capital in the business. That is why you are able to increase your turnover. It's not like capital remained the same and we made high turnovers at this time. No, you should not look at figures in isolation, sir. You need to read in between the lines and combinedly together. That is not looking at figures in isolation. Then inappropriate data processing, mistakes in data can happen. Poor presentation of data and information, not properly presenting it. Inappropriate comparisons or benchmarks, common sense. Compare apples to apples and oranges to oranges. Collection of data and failure to understand the underlying sample. You know, you collect sample data. What if the sample itself is wrong? What if you wrongly picked samples? You did not collect a more homogeneous sample. You just selected random sample and it was not appropriate. So that can also happen, right? Okay. Next, failing to understand percentages. Okay, this is something that I really get pissed off when students do this mistake, sir. Please pay attention. This is some common mistake that you will do. Sir, suppose GP in last year is 10%, current year it is 12%. Some students say this is a 2% increase in gross profit. Some students say it is 20% increase in gross profit. Which is correct? If you're talking about relative in growth, the gross profit has grown relatively by 20%. The gross profit has increased absolutely by 2%. Whether you are giving relative growth or whether you are giving absolute increase, that is crucial. So both are right. You can either say 20% relatively growth or you can say 2% increase in the gross profit. Both are fine. Both are correct. But do not say 20% increase in GP. No. Increase in GP is 2%. Growth in GP is 20%. Are you following me? Yes. Okay. Next one. So what are the problems associated with qualitative data, sir? So many problems are there. You just keep on writing. First of all, qualitative data. How do you collect that? What are the measures for that? In which form should I collect that? Everybody has a different opinion. So the same movie, some people will come out of the movie and say that this is the worst movie I have ever seen. Some other will come out and say that this is lifetime classical movie. People have to store this movie in their hard drives. So it's an interpretation problem. Everybody has a different opinion. Right? Data may be incomplete. You don't know whether full information is obtained or not. Yes, misinterpretation. Absolutely. Lack of management familiarity. So qualitative information, no one knows how to deal with that. You might slowly learn it, but it's not always written on stone or something like that. Then solutions for that also is given. There is no set format. Yes, agreed. It is subjective data. Agreed. The opinions might change based on the circumstances. Agreed. And there is no standard also. Sir, simply I'll ask you, suppose if you went to a movie, you watched a movie, or you just came out of a restaurant. I asked you, how is the food? You said good. What do you mean by good? Quality good, quantity good, taste good. I don't know. What is good for you? Maybe you like less spicy, more a palate. Maybe a taste palate is different. I like it more spicy. What if? What is good for you may not be good for me. So this is the biggest problem with qualitative data. Managers could massage the customer, sir. Feedbacks report a bit biased sample. Yeah, possible. Sir, I'll tell you simple example. When you buy certain goods from Amazon or Flipkart or anything like that, the seller may send a small sticker stating that give 5-star rating and share the screenshot and you can get a 10% discount coupon for your next purchase, or you will get 50 rupees cashback, or you will get 100 rupees cashback. Have you ever seen or experienced such kind of stuff? You give 5-star rating and we'll give you cashback. I have seen that practically happen. Sir, let alone this, I'm so sorry to say this. I'm not cribbing or anything like that, but the example actually demands this. You know Google reviews, right? I have seen one particular person. I'm not interested to take the name of that person at all. I have seen a particular person collecting the phones of the users, students in this case. He took the mobile phones of the student, he logged into Google and he actually dropped self-reviews. I'm like, you are degrading yourself and you are degrading the fraternity of faculties completely. So such kind, yeah, reviews are basically completely biased these days. We can't help it, sir. And actually there are pages that where you can pay them an amount and they will give you fixed number of star ratings in Google. Actually true. Marketing companies are there. They created this 1,000 emails or 10,000 emails and you pay them a fixed amount of money. They will actually hire a person. He will log in with the different email accounts and he will drop a fixed review. They'll have this predefined reviews also. We'll give you this many 5-star, this many 4-star, this many 3-star, this many with comment, this many without comment. Exactly, that's selling these things. So qualitative data is also highly manipulated sometimes. It's possible to do that. Paid reviews, yeah. Happening, so this is actual thing that is happening. Chalo, that brings us to the end of chapter number 6. Is it possible to mitigate this manipulation? I'll tell you, it is not completely possible, but it is, I can say, you can reduce the amount of that thing. What you can do is, instead of depending on Google reviews, look for alternatives like Trustpilot, for example. I believe Trustpilots are a little more than Google because it takes efforts to actually go and drop a review on Trustpilot. Google Pay is very easy. You just search and then you write and you submit. It's very easy and everybody can do. But in Trustpilot, first you have to create an account. You will get a OTP or that email verification, link verification. Then you authorize that account. Then your account will be created. Then only you can drop a review. And that reviews also, there is a restriction that only your customers can drop a review. Anybody else cannot drop a review. So such kind of things are there. Trustpilot would be a more authenticated source than Google reviews. But then it is difficult to get those reviews from the customers. They do not want to go through that entire process. Na? Anyways, brands pay social media influencers. Yes, those things are keep on happening. Right now, Indian government also understood that brand influencers and these social media influencers are getting too many free gifts, review units and all that stuff. So there is taxation on those things as well now. In India, it is newly launched, newly introduced in the tax laws. So if suppose there is a brand influencer who is saying that use this lipstick to make your lips beautiful, or use this face wash, your face will glow like hell. If they're doing all that and if they're getting those products for free, those demo products, they have to pay tax on those products as well. I don't know, sir. I'm not going to take the name of those brands that you are mentioning, but I'll just keep it non-controversial for the time being. I have been in enough controversies with my students. Chalo, then we are already 20 minutes post the time that we scheduled. So I'll plan and I'll give you guys the next one. So I have your email IDs. So I'll send you an email, ma. If possible tomorrow, if not next week. Next week also, do we have sufficient time before your exam? Your exam is on? When is your exam, by the way? 7th. So next week also we are still within nice range only. Next Sunday and next Saturday and Sundays are 3rd and 4th. Oh God, next Sunday I'm actually having a road trip, so I'll not be off. Finally, after a long time, I'm taking a road trip. So it's just 100 kilometers, but still it counts. Chalo. So tomorrow only I'll try, sir, but having the session tomorrow might give us a lot of reflect time. That makes sense. That makes sense. Chalo, then I'll do one thing. Actually, I'll have to go to a puja at my sister's place. She stays in Hyderabad only. So I'll try to come back post lunch. Can we keep it 4 p.m. to 7 p.m. tomorrow? Will the next session be recorded? Absolutely yes. Yes, ma. I have made that mistake once where 6 hours of session was not recorded. I'm not going to do that mistake again. 4 to 7 works. Perfect then. We'll keep it 4 to 7 tomorrow. Good then. See you guys. I'll see you tomorrow. Perfect. Bye-bye. Let me just stop the recording.